Well, hello, ladies and gentlemen. Welcome to the Human Performance Lab. My name is Tony, and well, it's good to see that price is pretty much where it was when I left it at, I don't know, whatever time I left it this morning. I mean, it's down a little bit more, right? We did extend the ranges a bit, but we're still in the same range for the most part. So, yeah, there's always that. Good times. So let's go ahead and get into what is going on now. So price action and the daily perspective is down here close to value area low at 836 and a half. Value area low at 836 and a half. We came down into 910. I think 910 was the low. No, we came down here. So 860. I mean, there's still some room to the downside, is what it boils down to, right? We're down below IBF today. Initial balance. I can speak, believe it or not. Kind of under the weather. I took a drowsy cough drop thing. I don't know. It's a pill. Something the doctors gave me. And yeah, good times. So a little bit tired, but that's okay. We're going to get through this session. We're going to get this. Let me just focus for a second and I can speak. All right. So price action, we're looking at going back into value area low. Value area low for yesterday's Friday session is down at the 639 area. We're still trading in balance of the current time frame. All right. And this is important because when we're looking at this whole area in here, we're looking at potential long positions below us. Okay. This includes all the value area low of current value. This actually contains value area low here from Friday's session, from the actual break of the low. All right. Above us is where we have unfair highs, unfair low, well, really unfair lows, unfair highs above us in prior value. And this is where it gets a little tricky because we're looking for potential long positions, knowing that above us, there's going to be some indecision between buyers and sellers. That indecision is what we saw this morning. Now we're getting down here into an area where that indecision isn't as strong as it once was. We haven't even come back down here into the value area low yet of yesterday's Friday's value, right? So we haven't gotten to the value area low. We haven't broke through Friday's range of value yet. We did find support around VPOC. If you look here, we have a low volume node rejecting out of that, but we have not come back down and tested into what we would consider unfair lows of that area. Consequentially, this area here has a little bit of higher volume in the unfair lows. We did trade here for a little bit, and we have that kind of that same shelf beneath, which is acting as a level of support here in the current market condition. So we got the support beneath us. We've got some resistance above us. We were choppy this morning, and this is explaining exactly why it was choppy this morning. Because some time frames are telling us long, some time frames are telling us short. The market's in an area where it's not quite sure what it wants to do. Price is. And what happened with volume today? Volume confirmed that. Because we were having volume on both sides of the market. And there wasn't directional movement. And we could tell there wasn't directional movement. One, because the price wasn't really going anywhere. Two, you're watching the volume. And the volume is buyers and sellers, buyers and sellers, buyers and sellers, non-directional. So that's where we're at in the markets right now. non-directional price movement with non-directional participants. It's always a good fun time to trade. So what happened in the US session? Well, when we look at the open of the US session, we come in and we trade through this range. We try to break out of the range to the upside. We fail. Somebody in the in Discord took a short here in this area, which was absolutely phenomenal. Completely the right thing to do in the context of this breakout that was unable to move any higher than this prior high. So price action comes down, breaks lows of the session, rejects, trades back into initial balance, tries to reject again, creates a nice little range there, breaks back up into the mid-range of initial balance for the first 15 minutes of the session. And then we just immediately start trading down. Nice volatility there coming in. And then price action comes back into a range. We just recently broke out of that range and trading into a new one. Range, breakout, range, breakout, range, breakout. Synonymous with a market of not quite sure which direction price wants to go right now. We're looking for participants. And of course, what type of volume is the market looking for? Directional participants. And until it has it, this is what it does. Breaks out, range, breaks out, range. And you just have to pretty much catch the breakouts. And so the good areas to catch breakouts today were off of the midline, we're off of the initial break above these highs to come into these lows. And then, of course, this first breakout here, as you're coming down, moving back into initial balance around 10 o'clock this morning. And I picked up a little bit of that move, but not much, as you can tell in the revenue. I picked up 2,600 in the overnights, and so when you're up 2,600 in the overnights, I don't know about you guys, but me, I'm a little bit leery of trading in the U.S. only because one, I already have revenue. I've already locked the revenue in. Two, when the U.S. session is telling me both directions, and I'm already up my intention for the day, that's where I'm like, okay, I'm just gonna go ahead and relax. Is this a real live stream? What do you mean? Arbit out, what do you mean if this is a real live stream? Can you elaborate on your comment? Okay, making sure before I ask any questions. Thought it was pre-recorded. Gotcha. No, ask away. Ask away, please. Definitely. This is a really good session to ask away because of where the market currently is. But yeah, no, I'm just trying to get an idea of what we were looking at for the U.S. session, what happened, that sort of stuff. And then what are we looking at as we continue on into what's considered power hour, and then what we'd be looking at for the oscillation sessions. Ram, welcome. My filter on my multi-chat isn't coming through, but I can see the YouTube over here, so we should be good to go. Ram, welcome. It's good to see you. And so, yeah, please, absolutely ask questions. How do you set your time sliced volume profiles? Okay, so you're looking at these ones here. Is this a chart that you're looking at? Arbit out when you're asking about the time slice. I see you're on TikTok, so I'm thinking this is what you're looking for. Are you looking at this chart here? Bottom right and the time intervals. Okay, so you're looking here then. Opposite. Okay. I'm trying to figure out what chart you're looking at because you're on TikTok and I'm like, which chart could you be looking at? Because this is the main screen for TikTok right here. So it'd have to be this chart or it'd have to be this chart. One of the two. So if it's one of these two, right? The one just moved. Yeah. So it must be this one. Okay. So how do you set this chart up? This is a template that I created a few weeks ago. I'll do a video on how to create this chart for you. And it's going to be the same way that this one is created here. It's trying to teach how to create a chart on here, especially when people have different platforms and things like that. Are you working off of deep charts? Just out of curiosity. It is a little bit different. Okay. So this chart here is the daily chart of the overnights and the US session. So all in sessions included for the daily perspective. Then this chart is for this chart here. This is just the US session, same thing. So it's a daily perspective of the US session. The way Deep Chart sets this up, they set it up very similarly to TPO, so you do have to put a time frame in. That's what this is for here. The 5-minute just makes the chart look better than any other time frame. That's why I use this time frame within Deep Charts. And then this one here, this is off of a 1 tick. So it's basically taking the 1 tick and it's breaking them up into time price, right? Just like a TPO chart would. Instead of it being about price though, it's actually plotting the volume in here instead of price. So that's how these two charts are set up. They're set up exactly the same way. It's just the sessions are different. This is all the sessions and the other one is just the US session. All it's designed to do is give a little bit of a different perspective of what price is doing. So like, for example, here, right, we came off a value area low of Fridays. Well, it's the same thing here. It's just in the US session, it's, we came into this high volume area, and the high volume area is a little bit more pronounced than what we have here in the prior session on Friday. And then what I'll also do is I'll come in here and merge. I had unmerged everything because I was doing a lesson, but I merged all of these into here except for the last two profiles, because what that's going to give me is an indication of what market condition are we trading in, right? If I'm bringing in all of these profiles directly into one profile like I'm doing right now, then that means that we're trading in an area of value, right? And then in the context of value, what is price currently doing within overall value? That's what this chart is telling me. And then this chart here, when I set this up and I get my areas like here and like down here, right? Within the context of, do I use excess on the TPO? I do use excess on the TPO, absolutely. And the reason why I utilize excess on the TPO is because I want to see where the full range is in the bar itself. Because that's going to give me an indication of the true highs, lows in the context of that access, if that makes sense. And in terms of that excess, if that makes sense. Some people call it noise. I don't. You're welcome. Absolutely. I look at it as price. I don't look at it as noise. Every price has a meaning. The question is, do market participants show it as meaning? And that's why I use the excess, because the excess is actually based on volume at that point in time and not just price, right? What did the volume do in that area of excess? That's what I'm really getting at. Because I look at price as the path, right? You can go up and down on the path. The volume is the breadcrumbs, right? Who's participating? What is the crowd doing on that path? I want to know what the crowd is doing, Because if I just have the path, I can go up and down, and you're kind of unsure because you don't have an indication, right? So you use indicators and you use other information to give you an idea of what direction to go to down the path because nobody else is walking it. I try to walk the path that is going directionally and has the most participants moving in that direction. Could you explain initial balance and how to use it? Sure, absolutely. So initial balance, all initial balance is, so it's the first range of the market open and the session that you're currently trading. So it could be whatever session. I utilize the first 15 minutes of the session. You can utilize whatever one you want to. Gold BTC, welcome. Thank you for being here. Truly appreciate you. Hope you're having a great day. And so all it's doing is taking the range of the market. This is the first 15 minutes of the market. You can move it to 30 minutes. You can move it to an hour, whatever you want. And what that gives you is the initial range of the open. And then you can utilize that information throughout the day, kind of like value, right? Then price action breaks outside of value. You can look for a pullback and a movement in back once it comes back into that area of value. No different than trading value. Same thing here. This is the mid range. You can look at this as kind of the VPOC, and then any breakouts above, you would do the same thing and look for a possible breakout continuation to the upside. And so that's just initial balance. That's how to use it. Protection. There's two levels of protection on mine. Those are basically one standard deviation of full initial balance. So your initial balance is here. You take that amount, you just plot it below and above, and then a breakout below is going to plot the standard deviation and then second standard deviation. And basically what that's saying is once the market gets too far away from initial balance, expect a possible pullback back into or towards initial balance. So I hope that helps. Jacob, thank you so much for sharing the live. I truly appreciate you. Is it better to use the cash open or 1800 for initial balance? I always use the open. I never, so the 6 p.m. open, that's to me isn't an open. That's a time frame where they're able to balance the books, if you will. If there's any anomalies or anything else that happen throughout the day, it gives them a chance to be able to balance the books, balance the numbers, because everything is on a server here. There's no open pit, right? But then the market opens up for the Asian session at 7, and so, or really at 8. That's the time frame that I've marked my initial balance, is the Asian Open, the London Open, and the US Open, not before then. That way you get to track the actual open of the market where you're anticipating more volatility coming into the market. And what's the difference between volatility and momentum? Volatility is really a period of the market that's really moving, but it's moving so fast that you can't react to it. What's momentum? Momentum is where the market's moving, but not so quick that you can't react to it. So momentum's tradable, volatility is not. That's how I define those two terms, because I think those two terms are extremely important to be able to define, right? When do we stay out of the market because we're expecting volatility? And then how do we get into positions before momentum happens? That way momentum could carry our trade directionally. So I hope that helps. Great questions, by the way. Thank you so much for asking them. I think those were very great questions. I think that's information that everybody would kind of like to have, and nothing that I would actually think of myself to actually just share. So really appreciate it. Do I have a website? I do have a website. My website, though, is not about trading. It's more on the psychology side of things than trading. If you want to join the community, there's a Discord community that we have going on. Everything's free. There's nothing paid. So don't think that I'm trying to get you someplace where, there's something else going on. I'm trying to steer you in a particular direction. That's not what's happening. And then the website, let me get that for you too. The website is here. Now, on Discord, I do provide trading videos and training videos themselves. If you have questions, you need a video created, you want something more in a in terms that you're able to understand better, that's what I'm doing with those videos. And then I also post trades as well, in terms of what I'm doing, like in the anytime that I'm trading and I'm not online, I always post information about my trades and those type of things of what I'm doing in the market. Green, you're so welcome. Absolutely. Thank you for the question as well. I appreciate you. Let's see here. Sorry, I didn't shut my phone off. Ram question. Price just tapped Friday's point of control. How do you read this? What can you anticipate for tomorrow or rest of the week? Excellent questions. Excellent questions. We can get into that in the charts. Okay. So we just touched a VPOC of Friday's session. So I don't see that on my charts. I mean, I do, it depends on which perspective you're looking at. This is why I look at two different perspectives, right? So we're not touching, we came off of the VPOC of Friday, right? And then we came in and we've already come off of it here. So in the context of prior volume point of control, right? You can look at those areas of support or resistance, right? So price action, expect price action to act like a magnet into that area where it's going to bring price into it. And then that gives you a heads up to say, okay, now that price is here, it's in an area where I would anticipate price to be. How is it behaving in this area? Then trading accordingly in your short-term charts. Hey bro, how are you looking, where are you trading now rather than at London Open? Alex, how's it going? Because this is my practice session. So I can come in and I can actually trade the London session or the end of the US session. So what used to happen is, guys, I started trading in 98. Okay, so you gotta look at my perspective as a little bit different than most, okay? Because I've been trading for so long, right? So let's explain power hour and lunch session, for example, okay? Because this is all automated trading now in the context of on a server. There's no pits. Back when there used to be pits, right? We used to be pits and we didn't have minis, we didn't have micros and all these other things, right? We had the main indices, which was the S&P 500, was the main market that was traded, right? We still had a damn hunk, right? I appreciate that. So what we do is we now have, so what we did back then, right? What was lunch? Lunch was literally when individuals left the pit, right? Because it was all an open auction at the time. So that was lunchtime. It wasn't big wigs. It wasn't, asset managers or other traders for large firms and stuff, right? It's literally people left the pit to go to lunch. So it's a period of inactivity. And then when power hour happened, it was because the bond market closed. So the bond market closes at like 3 o'clock, right? 2:30, 3 o'clock. So when the market closes, I think it's 2. So when the market closes, they go to lunch and then they came back into the indices and would trade the indices as well, right? That's what we call the power hour, because now the bond traders created their own level of volume and participation in the markets that was of higher quality, or higher participation than what you would have during the lunch session, or even sometimes during the US session if crazy things happen within the bond market and now they're positioning. Okay, so that's the way that the markets used to run. Now those time frames are still here. They're still kind of, looked at, but it's not the same as what it was now that we're on electronic markets. So I hope that helps. Pack, so bro, how do you get these order flow things from? Magic. I have a magic wand. I've got a crystal ball, just magical things. I'm kind of a magical creature. What can I say? 270 subs, but I believe you're damn profitable for sure. Well, thanks, Pax. I appreciate that. I just started streaming a month ago. I don't know what I'm doing. I'm just streaming, right? What I want to do is help develop traders. I don't believe traders need another system, another set of indicators, another set of rules. Here's what to follow, right? Let's let's demonstrate our capabilities of being able to read price. And once we're able to read price, let price give us a direction of a path. And then we're going to use and incorporate volume into that so we can start seeing the participants and following them. And now you're developing into something instead of trying to use mechanical techniques for the markets. When the market opens, sacrifice. Oh my goodness, there's all sorts of new people in here. I truly appreciate it. And thank you guys so much for being a part of the community, for asking questions, for being a part of all of this. This is amazing. I couldn't ask for more than what we're experiencing right now. This is amazing. Appreciate it. Sacrifice. When the market opens at 9:30, does the book completely clear, then refill, or do dealers rehedge their data, et cetera, all at once? 24-hour market. Okay, the only time that we reset was when the market closes at what is it, 5:15 to 6 p.m. That's when they reconcile the books and make sure everything is good. Everything is cleared at that point, okay? Then the market opens at 6 p.m. Now, you can still have resting orders in there that aren't cleared if they're still set to server side. There's two ways of setting your OCO orders, okay? You've got your OCO orders, which are just on basically your machine, and going into the server of whoever it is that your broker dealer, and then your broker dealer can decide if they're going to cancel those orders or not. Okay. And then what you have is you've got everything that's on the server side, which is actually at the exchange. Those orders aren't canceled. And so when you look at the big picture of the order flow book, it really depends on who's placing the orders. But we don't really have a place where everything is completely cleared. Okay. The only time where that can actually happen is when curbs are in play because the market moved too much and you have trading halts. That's when you can have a reconciliation where everything is canceled and we start fresh again. But even then, you've got to hit a few, you got to hit a few roadblocks in between all of that from happening. Like there's got to be like three curbs set in and all broken for trading to halt and for everything to just be reset and start over again. Unk's mindset is damn amazing. Well, thank you, Pac. I appreciate that. I really do. I've been at this game for 30 years. I retired in the end of 2019 because of divorce. It just absolutely wrecked me. And in that context, it took me, 6 years to figure out what I was going to do with my life again. Became a hermit, almost died in that process. I'm grateful I didn't, but it was close. Blood clots. They vacuumed out like 3 ounces of blood clots out of my upper lungs in August of 2023. And so then I had to decide what I wanted to do with the rest of my life. And well, you know what? This is pretty much it. Not just in trading, think of trading as the laboratory. This is where we get to experiment with things, right? And it's only the experimental landscape itself, because trading will reflect everything back to you that's automated. And when the problem is we have a part of us that's automated, we have a part of us that wants things, right? That dreams, it has all of these other things. But when automation is online, the dream side of you and the automation do not communicate with one another. The automation side doesn't care about your intentions of what you want. And so they turn around and they come back, and you have to bring your intentions online to interrupt the automation, to allow yourself to manipulate your body to act towards your intention. We're glad you're doing well. You do just NASDAQ or also S&P 500. So, but well, these are great questions. I used to trade the S&P 500 pretty much exclusively with the Russell. I used to trade 25 lots in the ES and 18 lots in the Russell. Why didn't I trade more than 18? Because it started getting slippage in my fills and my lots, right? getting slippage when you're adding positions is not a fun thing. So when I entered the market, I entered with 18 to 25 in the Russell and the ES. You can tell I've been around a while because nobody even knows what the Russell is anymore because the NASDAQ replaced the Russell. It used to be that the NASDAQ was so illiquid that you would get split fills even with a 1 or 2 lot. You just couldn't hit it with any form of size whatsoever. And so now the NASDAQ came into play. And now you're able to hit more size on the NASDAQ. But it's basically the same thing. It's a little bit more volatile, a little bit more movement and directional movement, where the ES is much more rotational and tighter rotations. I did NASDAQ, but it kicked my butt. Yeah, and because of the volatility, Manuela, that's the problem with the market is the volatility. Sacrifice. I'm sorry to hear about that, bro. We need you here. I'm here. You know, I'm so grateful for everything that happened in my past because I wouldn't be here right now without it. And this is exactly where I feel I need to be. Sacrifice. What was NASDAQ price when you were trading it in the pit? Oh God. The ES, when I was trading the ES, we were in the 700s, guys. We were in the 700s in the ES. The first market I traded was actually pork bellies. I have stories. Don't get me started. Don't. Not today. You guys have no clue. None. I was trading before the minis were around. I was trading before the euro was a currency. You know, and well, exactly, we live and learn. This community here is not about following Tony and his trades, okay? This is not about, you know, having another trader to follow and maybe they can help me pass my evaluations. This is about us working together, collaborating together, coming in and demonstrating our skills, but also demonstrating the points where our methodologies fail, because not every single market condition is the same. Notice what I was talking about this morning at the US Open. I was anticipating CHOP to come into play. The market condition that most traders don't know how to stay out of, nor be able to read or see before it happens, right? These are skills that we develop. The whole idea is taking us to how we are in our trading today, an honest snapshot of where we are. And then how do we develop into the traders that we want to be? How do we shut the automation off enough to allow intention to come online so we can start manipulating the body to act aligned to intention? Because aligned intention is fulfilled intention. Why? Because the actions are aligned to what it is that you want, and it changes your reality, not because you dreamt of it, not because you attracted it, right? Because you literally aligned your actions to what you want, because your automation of what happens automatically, your predictive behavior that the subconscious mind controls, that the central nervous system controls, does not care about what you want. It could care less about what you want. And as long as that part of us is acting and it's not aligned to what it is that we want, our intention, we are stuck in life because we're not able to get the things in life that we want. So how do we do that? Sacrifice, you don't. You're not getting in. Don't even ask. I'm kidding. Let me get that for you. I'm a smart ass. I can't help myself. I'm sorry. Let's see here. You're in YouTube. How do I get this over to YouTube? Ram, thank you. There you go. Ram got it for you. He knows. See, I can train people. Thank you, Ram. I appreciate it. So in the big picture, right? That's what this is about. And how do we develop ourselves in that? But then here's the thing, everyone. We got to understand, right? This concept of we can make it work in trading, we can make it work in every single area of our life. And that's when we replace the laboratory of trading with whatever it is that your intention is. But this is our crucible. I served in 3 different military branches in the US. I was a Marine, I was in the Army, I was in the National Guard. I was young and I slept around, don't ask. There's stories there too. There's reasons for all of the things that I did in my life in that context, right? But I went from place to place to place to try to create that A to B to C path to get to where I wanted, because where I wanted to go was a little less conventional than what most people will do, right? So this whole project I have going on here is, how do we develop ourselves to align our actions to our intentions, where we can start living a fulfilled life of intention, rather than a stuck life of automation? We're just using the markets as a means to get there. And then we replace the markets with whatever else that we want. Now we have a bankroll behind us as well. We've developed ourselves, so it's not like you're following it individually. You're doing it on your own and your own 2 feet and your own accord. You're walking, you're running, you're doing your own things. Now apply those funds to the other areas of your life that are meaningful to you and live it. Live your life. Where now you're not living to learn, you're learning to live. 2 different concepts. You studied for S&P 500 for a year now. I don't know why I thought of my prop firm. I thought for my prop firm, I did NASDAQ. Well, and see, and here's the thing, right? The prop firms, they're not our friends. Okay, they're not. They're not built there for us to make money. No different than Vegas was built for gamblers to make money. Okay, the prop firms create rules that are extremely difficult to be able to utilize to pass for funded accounts. This is why when I came in here, I was planning on just coming in and using my cash account. Because my cash account, I can play by my own rules. The problem is, if I use my cash account and I'm demonstrating, how to use these principles of auction market theory for my cash account, that's good for me, but it doesn't help you guys, or most of you are turning around and trying to pass evaluations. The money management, everything is different. What's one of the rules that they use, that the props use to make it difficult for us? High watermark drawdowns. So our trailing drawdowns, high watermark trailing drawdowns. There's the phrase. That's just a beautiful phrase, right? High watermark trailing drawdowns. Well, what in the hell does that mean? What that means is, if you have a $50,000 account and you have a $2,000 maximum expense in maximum drawdown in that account, that means that they're going to stop your trading at $48,000. Okay, but let's say you turn around and you make $1,000. Well, now you're from 50,000 to 51,000. This is great, but your watermark trailing drawdown goes from 48,000 to 49,000. Well, let's say you turn around and you lose that $1,000. Okay, so now you're back to $50,000 again. But the next day, you only have $1,000 of risk now, because your trailing drawdown moved from 48,000 to 49,000, and now you only have $1,000 to work with. Because they're not here for us to make money. They're here for them to make money, and they create the rules that cause us to purchase more evaluations. That's the rules of the game. But the beautiful part is not that the prop firms are doing these things and making rules that make it difficult for us to hit our intentions and our goals, right? It's the rules of the games. The rules of the games. The rules of the game are there. If I can speak, the rules of the game are there. We can learn the rules and use them for our own benefit. That's the key. And that's what we need to build ourselves into. That's what we need to develop ourselves into, is a person that's able to take those rules and apply them to still achieve our intention. And that possibility exists, but we have to grow into it. Okay. Enough theory. Enough psychology. Let's get into the charts. And so now my question is, what do we want to do? Do we want to try to trade this US session, which is currently trapped in an area of value? That's rotational. That's showing signs of being in a tight rotational market with some breakouts occasionally. This is the type of condition that most individuals are going to find chop in, okay? And rotations in that are going to churn your account, all right? We demonstrated that we can recognize before these markets happen with pretty good accuracy, and we can stay out of them. And so trying to trade this to me is like, well, we're trying to get into the market condition that we're trying to stay out of. Doesn't make a lot of sense to me to be able to do that. So what I say is we do one of two things. All right. I'm going to leave it to the community to decide what we're going to do. All right. So you can type in a 1. And what is 1? 1 is we replay a day. We replay a day. We go into the full pre-market analysis of what it is that I do, define the areas, know where we want to trade around, and then we replay the data and we practice it, just like if it was real time. Okay? This is part of what it means to develop into a trader. So that's 1. Our second option. I have something else that I'm brewing. It's behind the curtains right now, and you guys haven't seen it. And it's a way to be able to practice being able to read price. Because if we can read price, we're reading the tea leaves of the markets, okay? We're actually doing something and practicing something in such a way that we're going to learn how to read the price of the charts that we're in. And why is that important? Because when you can understand and read price consistently, then you're going to be able to read it consistently at the live edge. And when you're reading it consistently on the live edge, now you've got your path before you. Do you go up or do you go down? And you understand which way the market is probably going to flow down, which path it's going to flow down, without even using volume as a matrix. Okay? So those are 2 options. Do you guys want to learn to read the tea leaves and price in the market and to have a practice that you can utilize, that you can replay and do that? Or do you want me to replay a day? So 1 or 2. Ram chooses 2. So sacrifice. This may be a silly question. There's no silly questions. But how many hours of sleep would you recommend for optimal clarity before trading? And do you recommend consuming caffeine before sitting at the desk? Wow. Sacrifice? Not silly questions. Those are amazing questions. It means that you're thinking about this and you're serious. Okay? Now, you're not going to like my answer. Okay? But I'm going to give it to you anyhow. It all depends on you. Okay? We're all different. I drink caffeine. I don't drink coffee. I drink a Celsius first thing in the morning. It helps me wake up. I don't drink any more caffeine throughout the day. I'm one of the crazy people of the world. I can work on 4 to 6 hours of sleep. Not a lot of people can do that. I can sit here and stream for 7 hours at a time without any problems. A lot of people can't do that. Let's not compare ourselves to other individuals. Let's ask the tough questions like you're asking. Look back at your life and what works for you, okay? And then in the context of what works for you, do more of that, because that's going to be your optimal state. Your optimal state is going to be different from mine. It's going to be different from Manuela's. It's going to be different from Ram's, okay? Everybody has a different optimal state. The key is we need to find yours. How do you do that? You try things. Literally, guys, the reason why I call this a human performance lab is because this is the lab. This is the place where you get to experiment. Come in here and trade with 2 hours of sleep. See what happens. If you don't trust yourself to do that well, go on sim. It doesn't really matter because when you're in an evaluation, you're on sim anyhow. So it doesn't matter if you're in a sim account because none of your orders are going live to the market as it is. Nothing bad is actually going to happen. Try these things out for yourself. Don't take anybody else's opinion for it. News, you want to know if you can trade around news or not? Beautiful. Do it. I did it once and I picked up 150 points or 150 ticks of slippage in natural oil one day. Or natural gas. Natural oil. Jesus, natural gas. Yeah, we're dealing with avocado oil now, guys. New market. Let's go ahead and get in. It's my own personal IPO. It'll be fun. That's a joke. Natural gas, right? So I picked up 150 ticks of slippage in natural gas trading news one day. That was just in slippage. I had my stop, which was 50 ticks away, and I literally got 100 ticks of slippage in my exit on a limit order sitting as a resting stop order. All right. I've tried things in the market. I don't take people's, opinions about this or about that. I try things. That was in a live account too, by the way. That wasn't in sim or anything else. That was a live account. I took a $1,500 hit that day. There's only one contract though. I didn't really care, but it humbled me though. It was a very humbling experience. It was a good thing for me. But when it comes to the actual markets themselves, what you need as an individual, that's what you need as an individual. We need to find that for you. So I'm sorry I wasn't able to give you more information than that, Sacrifice. Okay. But I know traders that, that basically used chew as caffeine. What is it? Velo, I think is what it's called, or something like that. They're like literally caffeine sacks that you could put in your mouth, almost like chew, and chewing tobacco, and it's just caffeine, and they swear by it, and they just trade off of that, for the hour or 2 hours that they trade. I mean, there's people that need 8-10 hours of sleep. There's some of us that need much less than that. Find the balance for you. Hope that helps. Not a great answer, and I apologize, but we're all different. There's 7-8 billion people on this planet, and there's 8 billion different answers to that question. Probably 16 billion, if not more. All right. Well, since Ram is the only one that answered me, either everybody else is asleep or you're bored or you decided you just didn't want to talk to me anymore, which is just fine. I get it. Because sometimes I stop talking to myself too, believe it or not, but that doesn't happen very often. So what we're going to do is we're going to do number 2 today. All right. And what this is I need to bring it over here to what makes sense for TikTok. Sacrifice, it's okay. I abuse Velos 2, 9 milligrams of nicotine and a good Celsius to start off every morning. You know what, Sacrifice? Keep doing that. There is nothing wrong with that. If age gets to you and you have to change what it is that you're doing because of that, do it. But there's no right or wrong answers here. The only answer that's wrong is doing the one that doesn't work for you. I'm a firm believer of that. Okay, so all we have here is a 15-minute chart. That's it. That's all this is a 15-minute chart. And what we're going to do is we're just going to go in and we're going to replay a day. Now, in this replay, we're going to do 24 hours and we're going to speed it up. And the whole goal is to say what the next bar is going to do. Now, that doesn't mean what it's going to do at its close. It doesn't mean what it's going to do at its open. It means what do you expect the next bar to do? So if I'm looking at these 2 bars right here, right, I would look at it and I would say, it's going to go up. It's going to continue up. It might come down here and pull back first, but I'm anticipating that by the time the bar closes, it's going to close green. Okay, it's really that simple. We're just using colors here, green and purple, and colors are fine in this sense because we're not using some time-based indicator in that's including lag in our analysis, right? We're just using price. And so, and then let's say that the market does go up and it breaks this high. The moment it breaks the high, even if it doesn't close up there, my analysis or my premise was still correct. It went up. Okay. And then we're going to watch the bar and see what it does. But we're going to speed this up. We're not going to do it at a 1 second time interval. We're going to speed this thing up to 200 times. All right. And we're going to go through a whole day of 24 hours and every session. And we're going to see if there's a session that we are able to predict what price can do better than another session. What does that tell you? What session you should probably trade in? Because you have a better accuracy, a better feel of what price can do in that time frame. And if you can't trade in that time frame, beautiful. Then you practice in the time frame that you want to practice in, and you demonstrate to yourself that you're able to do the same thing in that time frame as well. And now we're starting to practice our ability to be able to read price before we even add volume to it. But as you can tell, in the bottom of my chart, I have some delta down here. And what I noticed in this practice is that, for me anyhow, delta does help me at times to get an idea of what I think the next bar is going to do. So I included delta in my chart because of that. All right. If we're able to do this consistently, then what will happen is when we get over to the live market, if we have a time frame like this up, right, we can watch it. We can watch what price is doing in here. We can start watching the pullbacks and what we anticipate for the price action to do, right? We can start seeing where those price actions, where those pullbacks happen. And now we're able to start pinpointing our entries within order flow and using order flow to move into our expected direction of the 15-minute chart. And now we don't even need auction market theory if we don't want to use it. It's kind of like drop my mic moment, right? Because now we're scalping into the markets, and we're scalping in the direction of the 15-minute time frame, a time frame that we've already proven that we can read, like tea leaves. Ram, do you think this will be helpful? I'm asking you because you're already developing yourself. You've already drank the Kool-Aid, my friend. And it's fun to watch because you're doing amazing. Sacrifice. Have you heard of the term other time frame participants? Oh yeah, absolutely. It's why I use my longer time frame charts, and that's why I was anticipating chop to happen today because of what the longer time frames were telling me. Because we're in this area here where it's telling us to go long, and we're in this area here that's telling us to go short. Well, the markets are telling us long and short in a higher time frame, right? What are the other players going to be doing? Are they going short? Are they going long? I bet they're not even playing in that area, which is going to cause chop in the short-term charts. What happened? We got chop in the short-term charts today. Yeah, I've definitely heard of OTFs. Speaking my language, Sacrifice. This is how I speak. This is why I use volume analysis in my readings of price as well, right? And not indicators, because the indicators aren't going to give you any sense of what the other time frame players are doing. Yeah, exactly, Ram. I think so too. I think so too, because now we're going to train ourselves to be able to read price with a level of consistency, right? Then we take that and we apply it here to the live edge, to where we have volume. And now we start to look for what we anticipate that 15-minute to do from our practice, from that price. And we look for the other participants, right? The other time framers in the markets, the higher volume stepping in, the lower volume stepping in, where we expect price to possibly go based upon what we're seeing on the 15-minute chart. And we take trades based upon the direction we anticipate price action to go in based upon our 15-minute chart. Now we're scalping. Now, here's the thing. I am not saying that traders should develop into scalpers. That's not what I'm saying by any stretch of the imagination. But just follow this thought process with me for a second, okay? Here we go. Every single position that you enter in the market, if you are able to enter in a scalp position, a precise precision, with precise precision, right? No matter what time frame you're on, you can utilize that methodology for any style of trading you want to do. Or you can take a scalp position and you can turn it into a day trade. You can take a day trade and turn it into a swing trade, and a swing trade into a position trade. Okay? But if you're entering off of a swing trade based upon this criteria, and a position trade based off this criteria, and a day trade based off this criteria, right? You have different entry criteria for everything it is that you're doing. There's no continuity within your trading framework. If we learn to scalp, we can apply that to any money management, trade management system we want to. And now we can trade, now we can manage our positions based upon that bigger picture framework than having different entry criteria for every type of trading we want to do. I don't know. Maybe I'm just talking nonsense. But theoretically, it makes a lot of sense. Now we take that theory and we bring it into the lab and we run science experiments and we say, okay, can we do this? Let's find out. And what I'm really thinking about doing too is I'm really considering not trading the minis in the Tradeify account. I'm really considering trading the micros, and this is why. One, with the micros, it's really difficult to blow up an account if you're just trading one lots. All right, because I mean, it's 50 cents a tick. I mean, you got to really do something crazy to hit a $4,500 expense if you're only, in a contract that's 50 cents a tick. I'm just going to leave it at that. Something crazy has to happen if that's going to happen. So, in that context, what it also does is it helps me demonstrate and show how you can use inventory to manage positions just as well as you can a stop. And a lot of times it's better to utilize inventory to manage your positions. That way you aren't relying on an arbitrary stop. Right? You're trading more like an asset manager there than a trader. And what's the difference between an asset manager and a trader? When a trader enters the market, they have to be right. Institutional traders, they don't care. It's not about right or wrong. It's about managing the position through inventory. And that's the biggest difference between a retail trader and an institutional trader. All right. And this is why we say, oh, well, we're going to develop as traders into to a professional, and the professionals are these institutional traders, and apparently they're much better at doing things than we are, and we're just going to turn into become a professional like them. No, because the game is completely different between what we consider a professional trader and a retail trader. The game is different. That's like saying that you can be a professional F1 racer and come over and do really well in Indy cars, or vice versa. And as we know that race car drivers that have done that, it's very difficult to do. Okay, because the game is different. The cars are different. Everything is different. It's the same thing with institutional traders and retail traders. If you're a retail trader, don't hold yourself to a standard of professionalism that a institutional trader would, because an institutional trader is playing a different game than you. They don't have to be right. A retail trader coming into these markets and saying, hey, I'm going to go long here, you have to be right. You have to be. If not, the market's going to come against you. And the moment that it starts going against you, you're starting to lose funds and you're starting to lose money. Institutional traders aren't losing money. Okay, they're losing a little bit of ground, but they have inventory behind them that they're able to catch up to that. All right. And so they're not losing ground at all. And they're going to get themselves out of the position without even taking an expense. And they could be down 25, 35, 50, 100,000, 250,000, $500,000. They don't care because they have the size behind them and the balances behind them in order to be able to get themselves out of those positions, because they free up a specialized account just for their ability to have inventory to get themselves out of positions when it's necessary for them to get out of them. Retail traders can't think that way because they don't have the inventory behind them to do that. So do not hold yourself to a standard of professionalism like you're going to grow into an institutional trader, because it's two completely different games. I'll get off my soapbox now. Probably not. It doesn't matter what day we do this. I'm going to pick June 3rd. I don't think I've replayed June 3rd before, and I have no idea what that market did. And we're going to go straight to the Asia session. And we're going to do this off of the mini. So none of my accounts are changing, none of my other charts are changing, just this one, okay? And so already, what are we seeing here? Price actions trading in this range, right? We have rejection beneath us down here, okay? We have delta that's coming off into higher areas, right? I'm looking for this price to move back up again. Let's see what happens. And I'm going to show you guys where we're at June 3rd, or actually we're March 6th. We're back in March. Yeah, because this is working off of the way that Europe does their dates. It's the day, it's the month, it's the year, where we're used to the month, the day, the year. So these are just switched. So we're on March 6th right now. No, this is showing June 3rd. I don't know. Maybe I'm just crazy. Let me just hit play and shut up. Oh, well, we gapped down. Well, that's helpful. So we gapped down at market open on this particular day. And now we're going to go to times 200. And the market's probably just going to go ahead and go straight down. Okay. So this one here, looking for a down bar again. Okay. And it's an up bar. Now I'm 0 for 2 already. Another up bar. Another up bar. So now I'm 2 for 2 in this. Let me pause this real quick because somebody has a question. In response to that, when I'm trading a prop account, I genuinely do not care when I lose. Sometimes, since the entry cost is $50 to $100, yeah, I feel numb to the losses, and sometimes I can't even take trading serious. Do you think you could help me out? Well, what do you mean that you don't feel like you can take trading serious? What do you mean by that? What's going on there? You got to be a little bit more detailed than that. Maddie, yo, on Tradeify now. Let's go. Yes, I went live today. Now, I do have to back that up for a second, right? I did go live today. I was only up $100. I still traded the European session. And I traded the overnights, right? So I traded the overnights and I was up 2,600 in sim, but I did trade on Tradeify today and I was up $109, I think, a whopping 109, right? But I did go live today and it felt good, and I'm going to continue to do that. Thank you for noticing that, Maddie. I appreciate you. Yes, I did. Sacrifice. Let's talk about that. Join the Discord. DM me on Discord. Let's discuss. Since I have a stable job, I do not care about that prop account and the losses that can come with it. Yeah. So sometimes I'll recklessly throw on 3 minis, et cetera, et cetera. Gotcha. Well, let me tell you this, okay? And you probably already know. What you do in practice is what you're going to do live. All right. So don't go live. Sim for a while. Just keep on sim. Okay. And if you keep doing that on sim, you haven't earned your right to be able to trade in the prop account yet. Because you're right, you got a stable job, you're doing your own thing, you don't really care. I mean, if it works out, it works out. If it doesn't, it doesn't. But it sounds like it's something you want to do because you're spending time with it. You're talking to me here, which means you care about it. Okay. So you care and you're spending time. Okay. You're doing those two things. That's really, really, really good. All right. And you're recognizing the routine, the pattern, right? The automation of what's going on. Okay. And like Maddie, listen to him. Maddie knows what he's talking about. All right. He's the real deal. Listen to Maddie as well. What did he say? Try to think that every dollar you make is your money, even though it is not paid out yet. You got to try and hold on to all the money you make to make it the next day. Yes. As a trader, Maddie, 100% sacrifice. He's 100% correct. In the context of routine, automation, right? You have an automated process in there that you're recognizing, but that you're going to have to bring it offline. And that's going to take practice. And to bring that offline in that practice, you need to one, recognize it, acknowledge it. Two, you need to accept it. Not to accept it as, oh, well, that's okay that happened or whatever it might be. It's okay that it's happening. Okay? It's okay that it's part of the automation. All right? And it's okay that I have an automation because I'm a human being. We all do. That's what I mean by accept. Once you do those two things, now you can sit down in front of the markets. And when you sit down, tell yourself what your intention is. Focus on that intention. Look at the charts. Make that part of your make that part of the reason why you're sitting down behind the charts. Bring that into a level of urgency of what it is that you want to have or experience in your life right now. And that brings it in the present moment. What else exists in the present moment? The current bar. The current bar is always in the present moment. Then it ticks, and that tick is now in the past, and you're waiting for the next tick, which is the next present moment. And when you bring in your intention to the present moment, now you're acting in the context of focus and urgency. And focus and urgency marks the automation of the brain for change. And when that is marked, you can now take new action and layer a new wire within the marked change wires. And that's how you change, or that's how you run a new wire or a new level of automation aligned to intention. That's how it works scientifically. Okay. So how does it work here in the real world? Decide what it is that you want. Sit in your chair, look at your chart, say, hey, look, this is what's going to get me there. And then do it. Do it like you would if you were actually at work, that you're making your paycheck, that you're doing whatever, that you're making your life happen. Follow that process by replacing the one of, it doesn't matter anyhow, it's just monopoly money. I'm going to enter with 3 minis here and see what happens. That's how you start to adjust that. Maddie, or if you know that you got a start that is profitable, buy a bigger one, buy a bigger, more expensive account so that you feel it, because you need to feel the feelings that comes with risk to be able to trade. It's not a game. Yeah, exactly. You're right, Maddie. I'm looking at this in the context of he's already got a stable life. He already has an income and a means for him. So this is more like he's going to the casino and playing roulette. It's almost like this is more of a casino for him than it is. It's more of a casino for him than it is a profession. And I think that's what he needs to do. If he wants to become a professional trader, he needs to adjust the mindset of gambling to the profession of trading. Let's see what Ram has to say. A sacrifice. There was a time I was just trying to pass the eval by just doing YOLO trades, full porting. Though I passed evals in a day or two, I quickly funded as I could not stop full porting. Exactly. Absolutely. Because what you do in practice is what you're going to do in your trading. Could not get rid of bad habits from passing evals. Yeah. Again, bad habits or habits not aligned to professional trading, you practice those things, you're going to practice them day in and day out, and the market's going to come back and get you. You get lucky sometimes, and then the market shows you and proves to you once again that you're really not special or lucky. Yeah. All right. Sacrifice, let us know if you have more input on that, and definitely listen to Ram and Maddie. Maddie is already, this is what he does for a living. Ram is developing himself into that, but not only is he developing himself into that, it's every single day I see growth in Ram. And so you got two different perspectives there: an individual that's developing to get there, an individual that's already there. So listen to them as well, and both of them are in the community and Discord as well. So if you're interested in more of that feedback and how to work through that, you all can just, have some conversations in Discord too about all that stuff and work together through that as well. I'm like 50% right now. So this is the down bar here, right? I'm looking for a continuation down. Okay, broke the low, continuation down. Continuation down. Now we have the pullback, right? Continuation up. And see, in that continuation up, right, we did end up closing down there, but we came up here and we tested the high. So if you were in here, you could have gotten out with a break-even trade. That's what I mean when I'm looking at this and I'm practicing the ups and the downs of where I'm anticipating price to go, because I'm reading price. And when this bar closed down, I'm looking down again. I wasn't able to see it because I was explaining what was going on this bar, and I'm at 200 speed here. When I do it on my own, I'm running 200. Here, I'm probably going to want to slow that down because I will be describing things. Rejection, I'm looking for an up. Rejection, I'm looking for a continuation down. That rejection's not there anymore. There's rejection, continuation up. Rejection is broken, continuation down with an up to test back up into this area possibly, but down. And see now how it's going back and forth on this bar. You're anticipating the up and down on that. Those are your sideways bars. And look, it created an inside bar. It didn't expand its range. Now we're looking for, I didn't even see anything on this chart. So we're on this bar. So we're just going to stay neutral on it. But I was looking down, down again. And now we got the rejection down here, down again. And I want you to notice something when you're looking at this price, right? When price action came down here and it came all the way back up here again, and then it closed down here, that's a good indication that we're going to come back and test where those buyers were, where we're probably going to have in those buyers a higher volume someplace in here that we're pulling back to. I appreciate all the advice. I've spent countless hours studying multiple theories, et cetera, et cetera. Like you said, it does feel like a casino at times. Yeah, sacrifice, exactly. And it's not a bad game to be in if you're just gambling, but do so on your higher time frames, not in your day trading, because in your day trading you need the consistency. The consistency is what makes you profitable in your day trading. Maddie, what about it? I want to know your opinion too on this, Maddie. This is what I'm looking at doing. This is a demonstration on how to read price, okay? And how we can practice learning to read price. Like price now becomes like tea leaves, right? And we're reading that in the context of a 15-minute chart. Then we take that information, once we find what sessions we do well in. Those are the sessions that we need to want to trade in, and or if we can't, then we need to develop this process of being able to read a price like this, where it's moving much faster than it would be normally. Our brains need to work and faster in interpreting it. Then when we get to the live edge, the market starts slowing down for us because it's tick by tick. Okay. And then what we do is we turn around and we use the same information, but we bring in our order flow. and we turn around and we say, okay, now how do we execute around this? But we don't want to go into the execution until we can actually read price. This is the first key. If you can't read price consistently and be able to do this with an 80 to 90% accuracy, then you want to develop yourself into it first. And then once you can, with about that 80, 90% accuracy over a 24-hour period. So I just did a day recently of this, and out of 24 hours, I only had 6 bars that I was completely incorrect on, and they were all in the Asian session. And I told you guys I don't like trading the Asian session. It's because I don't have a good enough read. My read isn't as good in the Asian session as it is in London, the US. And this experiment proved that for me. And then I can turn around now and take this practice and couple it with order flow. And now I have an expectation of what I'm reading here, and I'm able to bring it into these charts here. Maddie, great exercise. This, love it. So you're looking to predict the next bar. That's it. Right. And not necessarily the close, right? I'm looking for the price to move in the direction of what I called. Okay. And so like this is a down here, right? This is a nice down bar, but this bar created rejection off of its low. So we should be able to expect a continuation to the upside to at least test that. But this bar here, I'm looking at it to break down and actually break the low at some point in time in this bar. And it didn't. This bar did not break that low, okay? And so that would be a bar that I was incorrect on. That's my 4th bar that I've been incorrect now in this session. And then this bar where it closed at, I'm anticipating a continuation down. If we get the rejection down here, what's going to happen? We're going to get an up bar and we're going to start moving up. But I would assume some downward movement because of the rejection on this bar, the rejection on this bar, and where we closed at in this bar. But we closed up. We didn't close below the open of the bar. We closed above the open, telling us that there's buyers up there. I'm anticipating those buyers to be tested before price action actually comes down. If the buyers are strong, we're never going to see the down and we're going to start seeing higher highs. This is the analysis that I'm doing in my head as I'm looking at how these bars are forming, right? By only looking at candlesticks, we aren't on previous levels or anything. Nothing, Maddie, just candlesticks only. Nothing else, just candles on a 15-minute chart. Why a 15-minute chart? Because it's close enough to an entry chart, 2, 5, 10-minute chart, whatever it means, whatever it may be that you use. It's close enough that you could use directional movement of a 15-minute to pinpoint an area of interest for an entry on a short-term entry chart in confluence with the direction of the 15 minutes. This would actually replace the need to even have auction market theory at all. And now you're scalping. And then if you want to day trade instead of scalp and move into some of those things, now you learn the auction market profiling and those type of things in order to be able to do that. But this is the practice for scalping. And why do I think scalping is the best place to pinpoint than day trading, swing trading, or position trading? Because if you can pinpoint your entries on a scalp, you can enter in any time frame that you want to trade. No levels, no previous anything, just candles, just price. And as you can tell here, I am using some delta. Because delta helped me predict a little bit better. Like this bar here where the green delta came in, right? The buyer delta, even though we closed off of the high, we had strong buyers in that market. If we come back in and see those buyers again, we're going to break highs. Okay, let's go. Did this a lot years back. I'm in here. Let me see if I can get to the same as you. Exactly. And I did this in a time frame back as well, but I did it in the context of not price like this. I did it in the context of time and sales, and just order flow only and reading the time and sales. And so this gives me a little bit of different perspective than the time and sales. But I really feel like this is a great exercise for individuals that are trying to develop into a trader, that they're going to be able to develop in reading price. Once you can read price, we can couple it with participation. And now we have areas that we can just see in the charts of where we're looking at in the context of entry criteria. And now we have volume to back that up as well. So now we have price action. It's breaking the highs, right? Just like I was talking about. So I'm looking for a continuation up here. Depending on where this bar closes out, look at the delta, continuation up. We're getting a little failure here. So possible continuation up, but I'm looking at maybe a possible downwards move here a little bit to test these lows, but definitely an up. Everything is still looking up. Now this is a little too fast and try to explain what it is that, as I'm trying to explain what I'm seeing, it's moving a little bit fast. When I'm just doing it on me and just me, I can go like this. I go, okay, down. And see that right there? Even though it went up there in the beginning, see, I noticed the rejection in here, right? Even though we broke the high up here, I'm still anticipating the continuation down, and that's exactly what the follow through is. And so when you're doing this, right, don't say that, oh, well, I was looking down and it made the high, so that's wrong. No, look at it as, what did price do in that context? We just broke the high up here. There's rejection up there. There's rejection again. You have this nice big down move with this little up move here. This could be the start of the continuation move to retest these lows down here. We don't know if that's going to happen or not, but we need to anticipate these things to happen before they actually happen. Because if we can't anticipate them happening, then we don't know what's happening at the live edge right here. We have no clue to base it upon, and now any entry we do is just guessing, not a bias, anticipation of what the price action could do. We can absolutely take out these highs if price action continues up, but we're in a nice downward move down here. We do have rejection and buyer support here, but what's happening every time we come up here into these highs, we keep rejecting. What is price probably going to do? Come back down and test these lows. I'm looking for a down here, and look, we came right back up there. You notice how we just came back up there and we tested again, right? And then this bar closed off of its low and an up bar, and look at our delta on that bar, increasing delta. Anticipate these highs to be tested. Please zoom in a bit on the 15-minute chart. No, Maddie, we're not doing that. Goodness gracious, you guys are so damn needy. Oh. Is that better for you, Maddie? You're like, you could do it without your comments. Oh, good times. I appreciate you guys. You can't take yourselves too seriously, right? And so what's going to happen here? Are we going to break these highs, or are we going to see rejection again? That's the key of what we're looking at here. All right. Where does this bar close at? What's happening? Down. I'm looking for a down now. And that bar was completely wrong. I'm looking for an up. That bar is completely wrong. Now I'm looking for a down. There's the down. Now, needy, so much better than thank you. Good, perfect. What happens? What can I already tell about my own trading with this little trade that happened in here? This little, I'm looking for a long, and then I'm looking for a continuation long here, and then I'm looking for the down, right? What's happening there? I can already tell that naturally I am not affluent in trading consolidation. My way of reading price doesn't work well in consolidation. No wonder why I build plans that keeps me out of periods of consolidation, because I don't trade them well. It already gave me an insight to my own trading. And that's just being honest. That's being honest with myself. It's being honest with the community. It's being honest with what I'm good at and what I'm not good at. So I can develop into making that better, or develop into seeing chop happen beforehand. And so what happens now? The up, right? What should you expect? Up. What should you expect? Continuation to the upside. Even in the pullback, continuation to the upside, continuation to the upside. So now what can we say? I can trade trends pretty well, which, I mean, God, over a period of my time, I thought I was never going to say that. Okay. But in the context of overall analysis here, I'm trading the trend really well, and I had some issues here in the consolidation. big negative delta, but bar closed positive, looking for the high now. Yes, exactly. 100%. And that's when we're able to start utilizing the delta a bit more, right? In the context of what we're looking at in this. Yeah, Maddie. And I think that this is going to be helpful. I don't know how helpful this would be for like you, right, with all your experience and what you're doing in your trading. But I think for developing traders, I think this is a really good exercise, and you just do it. And I mean, we started at 8 p.m., right? It's already 1:30 in the morning. And so we've already done 7.5 hours in this little bit of time frame. And so you can spend 2, 3, 4, 5 hours and go through days of data doing this, really seeing where you're at, where you're better at in the markets, and what sessions you're better at, what market conditions are you better in, all of that. And now we have a little bit of rejection, but continuation up. A little bit of rejection, so now looking for a down. And see, I read rejection up here perfectly. Up here when it was already here, not down here where I've been entering. The chat is too slow to reach you to be in this. Yeah, you got it, mate. Send it. No, I love it. Good exercise for everyone, to be honest. Thank you, Maddie. I appreciate that. Ram, beautiful. I appreciate that. Ram, do you think this would be helpful for you as well? And yeah, the chat, there's a delay in chat. I'm going to see if I can't make that more real time so we can talk, better, Maddie, in this context. But yeah, Ram, do you think this would be helpful for you? I mean, you're one of the participants now that has been here almost since the very beginning. If not since the very beginning, I don't remember what session we actually started talking in, but I think it was one of the first few sessions. And you've been developing through that. Do you think that this exercise would be helpful to you? But notice where I saw the rejection here. I noticed where I saw the rejection. When this bar closed and it didn't continue, I was expecting the pullback, and I was expecting it when it tested in here. Now, I don't have volume in here. I don't know where the high volume is. I don't know where I would be looking at that rejection, right? But I saw it just in price. And the price action came down. Look at the big delta down here. Still looking for a continuation down and a follow through below these lows. Ram, yes, once challenge, I have it to how to manage stop loss. Well, and right now we're not managing stop loss in this. What we want to do is we want to be able to pinpoint directionally where we think price is going to go. Okay. And once we can do that, then we can turn around and say, okay, in the context of what I'm seeing here, what am I seeing in volume? What am I seeing in price? What am I seeing in large orders? What am I seeing in VPOCs? What am I seeing where the high volume is coming into the market? Where are these pullbacks happening to? And then we can start pinpointing that information here when we're able to read this really well, and we're able to read it with a consistency of 80, 90%, if not better. Then we've earned the right to bring it here. And once we have it here, we can then turn around and say, okay, now how do we put the two together with volume? And that's going to pinpoint our entries, and that's going to pinpoint our stops. And we're going to build a system out of that. Jason, thank you for the feedback. This is great stuff. Learning so much. I appreciate you and that feedback. And so this isn't about where we're entering, where we're placing stops, because I would never suggest doing a scalp off of a 15-minute chart. Yeah, that top bar closed green, but big negative delta, but it closed super close to the open. Delta divergence, great indicator of a pullback really. Yes, 100%. 100%. This is exactly what I saw too. You get your lower volume, right? You get the down volume. Price action wasn't even able to come through the open, but what is this down volume telling you here? That there's more sellers on the market hitting the market than anywhere else. And so just came off of this big long, right? We can't turn around and seem to get above these highs up here. There's the rejection and then the continuation play to the downside. But what did I expect though? When I was looking at this, up, but I'm looking for down. Sure enough, there's the up. We're testing back into the buyers. Why? Because we closed up. We're going to test into those buyers up here, right? And we're going to see if the buyers are going to be aggressive. What happened? We had down delta the whole time. And price action came down. Delta divergence, all sorts of stuff honing in on this area. And if we can see it just in price, we can start to replay it and bring in the other information to give us more clarity. And then we can take that clarity and bring it into more focus, granular focus. And then we can take focus and clarity and bring them in all at once. What I should have done is move this to an M and Q as well and replayed them together. But I'm kind of glad that I didn't, because then we're complicating the methodology. Leave it here first. And then when you hit your 80, 90+% accuracy, whatever is enough for you to be able to look and pinpoint entries, now you take these two charts and you make both of them live. And you slow it down. And then what you want to be able to do after you slowed it down and you've done it through that point and you have your methodology, now speed it back up again and practice when it's fast and seeing it when it's fast. That way, when the market speeds up, you're not lost because you're already able to read the fast market. You may not be able to execute, but you're still able to read it. That way you don't have the big bars that happen. You're like, well, what just happened? The questions are gone. You know, there's times where I almost amaze myself. I mean, seriously. This is pretty cool. I have to admit, this is a pretty cool idea. And I'm glad that you guys are finding value out of it. And so now the down, right? What we have there in that bar, right? We had momentum coming in. We had buyers stepping in. We still have strong delta down here. But what are we anticipating? Buyers to be tested. This should be an up bar. May not close up there, but I'm anticipating these highs to be tested again. But where am I anticipating price to come back to? I'm anticipating price to come back down here into this area. Why? This is the consolidation. This is where buyers actually first started getting aggressive in the move after the initial. I'm anticipating price to eventually come down here and test, and when it does, buyers to respond. Up. Up. Now, I'm going to be honest with you guys. In that bar there, we didn't actually break the open. But look, the rejection, anticipating the up. We came in and we tested the open of the prior bar and immediately found buyers. I still look at that as a bar that if I was to enter down in here, anticipating a long from this here, from this movement, there's still enough room there to at least move into a break-even trade. So I look at that as it went up. I anticipated up. It didn't break the highs, but I'm anticipating long. And the rejection that came in here, anticipating long, you could see something in here that could possibly get you into a long position to make you go long. So this isn't about just looking at up bars and down bars in terms of color. Okay, look at how price reacted and what you expected it to do based upon that reaction. So this one here, I wasn't able to say it soon enough because it opened, right? But down, why? We should be coming back and testing this area where the sellers came in and rejected. Is it going to stay down? Probably not. But anticipating it to come down and to test this low. We tested the low and we broke it. Up bar. So what could have we done on this bar? We could have shorted when we came down into the low down here, noticed the rejection in this area, and then gone long. This is scalping. Remember when I told you guys that I had a trader that I worked with? Probably the best trader that I have ever met. Watched him trade live. This is very similar to what he did. And he was absolutely phenomenal. And I can't touch his talent, but I think I know how to train myself to replicate it. And that's in here. And now what would he say about this bar and where it closed? He would say still look for a continuation to the upside. But he would look at this as it closed and below its 1/3 range. He wouldn't even trade this because it's a doji. When you get him on the show, yeah, Jason, I agree with you. I don't think he's around anymore. I looked him up and I can't find him. And he was old. He was 78, 79 years old in 2018. So I lost touch with him in 2020. You'll take my replication. Thanks, Jason. I appreciate it. I'm trying. I really am. And so this bar here, what would he say? He would say he would turn around and just wait, right? But when price comes up here and starts in this rejection, this guy would have been short right up here. And he was doing this on the ES, and he was a bond trader. Guy just phenomenal. And he's using a 4-tick stop. 4 ticks was his stop. And then as the market went, he just trailed. He just trailed is all he did. And he'd pick up 1 point here, 2 points there, and as soon as the market started going in his direction, even 1 or 2 ticks, he was immediately moving his stop at 1 or 2 ticks. He only took like 1 or 2 actual full expenses the 6-7 hours that I watched him trade live. Down bar, expect down. Expect it to go up on this next bar to test those highs. There's your short. There's your short. So this here was your short, but it was also your long too as the market's moving up. And then there's your short again right there. Long. Didn't break the highs, right? So we're looking for a possible down move because we didn't break the highs, even though we were looking long at the open. Long here. Why? Because of where the bar closed. This one here, guess what? It's going to probably open here someplace and it's going to come down. It's going to test this area. There's your long. That is what you want to be able to do in reading this. Anticipating that down here. Market comes back above its open. There's your long. You're anticipating that test though. And then there's your long. Next bar. Price action is going to come down. Then it's going to go back up and it's going to test the open. Okay, we didn't get the test of the open. Beautiful. When we didn't get the test in the open here, this market's not strong. It's weak right now. Look for a down bar. It's already started, but you should be expecting a down bar. Rejection down here at the lows, it gets across its open. Guess what? You probably want to go long there because of the rejection at the lows. Okay, down bar. Look for a down bar again. This bar here should be down. Watching Fabio and his mentorship, he'd be as fast as the dude you talking about too, and then got half points here and there. And then every 5th, 10th trade, just flying, he prints money. So there is something. Yes, absolutely, Maddie. Yes. About what your mate did. The big ones does that. Yes, exactly. Exactly. And this, what I'm seeing here, so my whole thing was, coming in here, I know I can't trade that good right now, okay? But I know I can trade these levels pretty darn well. And I do that consistently, okay? But I can develop myself to be a better trader in here. And that's what this is all about, becoming that better trader, developing myself into that style of trading. Does this work on Facebook Marketplace? What do you mean, David? I'm sorry, I missed you, David. I didn't see your comment. What do you mean, does this work on Facebook Marketplace? And now we're looking for a down bar on this. And there's your continuation to the down right there, right? So that was your continuation to the downside, right? But we barely broke the lows. When price action comes back up again, there's the open right here. There's your long. And you just trail your stop. And then what happens at the highs there? Comes up, barely breaks the highs, right? Comes right back down again. He'd be short up here. How he did it, I don't know. And remember, I'm at like a 40 times right now, so it's moving way too fast. But that's kind of the whole point. Speed it up in the beginning. So you're not over analyzing. You're not doing anything else. You're literally just doing this. Up. Down. Up. I don't know. Down. Up. Up. Down. Up. 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 Which that one happened so fast that, but you're at 9:15 right now. And so we started at 8. We've already done over 12 hours. Okay. And in this whole period of 8 hours of 15-minute bars, so you have about 32 bars, I had about 10 of them that were not correct. And so out of 10 out of 30, I'm only at 70% accuracy. Not good enough. So I need to practice more. But that's it. That's our practice. This is how we start developing ourselves in trading, I believe. Being able to read this information at that speed. And when we can do that, then we start to bring it into the lower time frame charts. We add in our volume analysis, and we're looking for our pullbacks, and we're looking for different things along those lines to key us into the scalps themselves and demonstrate and to be able to create that ability to be able to do that. And if you can enter down here, you always have an extremely tight stop, always. And if you can enter up here, you always have an extremely tight stop. But you have to be able to see it. And this is one of those ones where I was not expecting this down move. But what happens when it comes down and it doesn't continue down in here and it doesn't break these lows, you should be anticipating in here somewhere along. And that's going to be hard to do off of this really strong down bar. But that's what the good traders do. Maddie, notice how the low gets set in by hitting the candle with the biggest positive delta. Almost there is someone who says not further down now, someone who got in on the positive delta bar. Somebody either getting in on the positive delta bar, right? Okay. Or it's also individuals fading that large delta on another time frame to bring the pullback in. And then the large player coming back in. And that's where we see the momentum and the volatility. And then fading that here. Why fading it? Why would you do that? Because the down here, right? And the pullback on the other side. It's what keeps the markets rotational. What kills retail traders? Rotation. Are they doing that? I don't know. Is it possible they could be doing something like that? Most definitely. Absolutely 100% possible. But if that's what's happening, it doesn't matter who's doing it or what's actually happening to cause the mechanism. If we can see the mechanism, we can play the mechanism because we understand the rules of the mechanism. We don't need to know what the mechanism is. We just need to know the rules. We don't need to know why the mechanism exists. We just know when and where. And on that bar with this type of volatility, again, I have no idea, but the highs here rejecting once again should be short in here someplace. You know, my problem is when I see this, I hesitate and I'm entering down here, or I'm entering at the break of the open, right? Instead of entering in the area of the actual rejection. And this is where some people will say that my entries are too low or I entered too late, and they're 100% correct. But what I'm waiting for is that open, right? Because I don't quite see all of the rejection yet into these highs. Down, down, up, 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 up. And then we just continue up with the trend, right? And you're just trading with the trend now. So there it is. That's the practice. Send it in Discord what I meant by the other message there. I sent here. I'm going to send this in Discord. That way you can talk to me about it a little bit more, Maddie, because I'm probably guessing I didn't understand everything you were talking about there. No, what are you doing to me? Okay. Meant from the YouTube chat. Let's look. Let's look at what Maddie is looking at. And Maddie, I mean, seriously, I truly appreciate you and your insights and just everything else. This community thing. Yeah. Yeah. Well, and Maddie, right? It's so funny, okay? Because that's where the inventory is. Right? This is exactly where the inventory is. So when we broke out of this range, what happened? We have a bar that closed up, right? And closed outside of this range. There's your market shift bar, okay? Then the high delta comes in, right? So now you have your high delta that comes in after that market shift saying, hey, look, we have a possible trend, right? Then price action turns around, and where does it come back and test to? Exactly that area where they stepped in. And so now you're building inventory in the area. And what happens when you build inventory in the area? You're kind of causing that chop a little bit, but all the rejections at the low. And then what happens? The trend continues because the inventory was grabbed the whole time. You're just grabbing inventory in here. I bet you if we looked, right? Exactly. It's exactly where the inventory is. Yes. And I bet you if we look, we're going to see high volume down here into these lows. And it's going to let us know that the inventory is being grabbed. Oh yeah. Yeah. You're spot on, Maddie. Absolutely. Now this is much more of a trading methodology, right? A way of turning this information and turning it into a system, right? But that's all going to be based off of the individual trader. Not everybody's going to want to do this as I'm trying to do it, where I'm basically taking a trade on almost every single bar, right? Others are going to want to turn it into a methodology like this and collect inventory. Others are going to want to fade what's happening here and go into the short side. And none of them are wrong. But now everybody is able to turn this into a methodology based upon what they see and their perception. This is exactly what it is that I'm trying to teach, right? I'm not trying to teach people my methodology. I'm trying to say, hey, look, this is how we develop ourselves to find a methodology that's right for us. But we can't do that until we can read the tea leaves. What are the tea leaves? Price. Until we can read price, we're trying to read indicators. We're trying to make sense of price. Why are we trying to make sense of something when we can turn around and learn how to read it? You guys are awesome. Absolutely, absolutely awesome. And so, right now it's just a trend continuation. And if it's a trend continuation, what are you looking for? Just longs. Every single pullback, in each one of these bars, long. And if you notice, right, it's a down bar, but it came down in here. And if you're looking at long off of the pullbacks themselves and you're noticing this area in here, maybe high volume or something else along those lines, there's room for profit in there. Yeah, true. Took it too far in comparison to the exercise here of what she was doing. It is just there, though. Cannot see it exactly. You can't not unsee it, right? Exactly. You're 100% correct, and you didn't take it too far at all by any stretch of the imagination. This is what it means to collaborate. This is what it means to be a part of a community, to see things through a different lens, and to take ideas and try them on. I can tell you right now, I probably would not have put this context into this detail ever. You're able to, and you were able to share that. And this is going to be helpful to maybe not just you, but other individuals as well. So I appreciate the feedback, and no, it has nothing to do with, anything outside of the scope of this exercise, because this exercise is designed to create these types of ideas. That's what it should be doing. You should be seeing something in this. And that's something that you're seeing, just like I put delta on here, should make it so you can take how you're reading these bars and turn them into where you can read them with 80 to 90% success rate, if not higher. When I did this on my last day that I did, I only had 6 bars. Only 6 bars over a 24-hour period. And so we have 96 bars in general. For 90%, we can drop 10. So I was already at over 90%. Not doing as well on this particular day, but I'm also teaching and doing other things as well and explaining this process as I'm doing it. And now look, here's your high volume again. There's your high volume spike. Now let's see what happens. Down. Up. Why up? Look at your high delta that came in on this up bar here, right? Well, really, in this down, okay, we're in an uptrend. When we developed this, it didn't just come down, it tested up here a little bit for buyers. So I was anticipating this move to retest that. And now this bar here, the way that it's forming, I'm looking at a possible continuation to the downside, but we need to wait for this to form. But the way that this bar is forming here, no matter where it closes at, if it closes below its open, I'm anticipating buyers to come back and test this higher, test into these highs because of the way that the sellers pulled back on this position, on this bar. Up. And see? Right there, what happened? We came down, but we fulfilled we solidified the buyers in that bar. So anticipate a continuation to the upside. Test the up, test the highs there. Test again, buyers. Buyers are strong. Anticipate continuation. Buyers again. Why the buyers here? Because this bar coming down like this, off of an uptrend, I'm anticipating that sellers may come in, break this low, but I'm expecting buyers to defend any breaks of lows. Up. And there's your momentum. These are the trades that we want to get into. Because eventually you do that enough times, You're going to get in right before momentum. And when that happens, that bar takes you to the moon. And that's how we grow our account. It's by getting into those momentum bars. This is another momentum bar here. All your larger bars, momentum bars. And where do your momentum bars usually come in? The US market. I'm Mr. Needy here. Maddie, I love you. You're so awesome, man. I really appreciate you. Oh God, that's awesome. Could you zoom on the delta so both positive and negative bars are all visible? Yeah, absolutely. Let's see if we can't do that. I mean, it's gonna be tight, right? But that's the best that I can do in that, and that might be difficult for you to see. But now I have adjusted that completely. What the hell just happened there? Oh, I'm losing it. It's all right. It's all right, everybody. I am definitely losing it, but it is okay. There. Now, what we're going to be able to do, Maddie, is one of these days I will stream and I'll shut TikTok off, and then we can do something like this just for YouTube and Twitch, so we can actually see what in the heck is going on, and we can blow it up like this and we can watch this together, because you're going to have insights to this, insights that I'm not going to see. Yeah, that monster bar there screwed it up. Where did that come from? Trump again. Yeah, it's 3:00 in the afternoon. So we started this. Maddie, think about this. We started this at the Asian Open, and we're already into 3:15 in the afternoon of the US session. Okay, so we've already almost gone through a 24-hour period in that short a span. We're reading the market that quickly. Put that into context for yourself for a second. And yeah, you're looking for a continuation to the upside. I mean, what else are you looking for in that bar? Still looking for a continuation to the upside. And any lows, buy them. Still looking for a continuation to the upside. Still looking for a continuation to the upside. And what happens if you continue to buy these lows? It's moving up enough that there's still revenue, or at least a break-even position. Still looking for a continuation to the upside. Doji bars down, confusion in the markets. You wait. But look at what time it is. It's 4:45 in the afternoon now. So you wouldn't be even trading this in the first place. And there's your day. I had about 10 bars in there that I was completely wrong on. Over a 24-hour period, how many bars are there in total? 96. So I dropped about 9. That puts me at about a 90% accuracy. Thoughts, ideas, Maddie, how do we make this better? What do we add in this? We need to go back to our developers in our community and saying, okay, how do we build a simulator for this? Thank you for the screen estate there. Yeah, but focus on the TikTokers. They the new stuff, I guess. My old ass don't get the vertical screen thingy. Maddie, I'm in the same boat with you. I get it. TikTokers will be fine. They'll yell at me when they want to see the price. Nobody's here right now talking anyhow. So this is for you and me at this point in time. I love it, Ram. Yeah, I figured you'd chime in and laugh, Ram. Prath would be enjoying this at the moment. But that's it, guys. That's it in a nutshell. And now can we turn this into a simulator? And then if we can we add volume analysis in the simulator as well? And if we can, now we just build a simulator for individuals to develop on. And they don't even need charts to do it because they can just run off the simulator. Maddie, I got ideas, man. I have ideas. I'm not saying they're good ideas. I'm not saying they're ideas that should be implemented. I'm saying I have ideas. Just sideways congestion action. And what are you looking for? Any low, buy it. Any low, buy it. And even with that large down bar there, any low that you buy, you're still okay. If you ain't saying it, I am. Sound like good ideas, them ones. Well, you know, we've got it. And then, you know, we can also because we have developers in our community, right? So they can code this stuff. We could get them to code something like this and bring this in to the equation of the analysis, especially if we can get delta. And I don't think delta is that big of a deal. I think it'd be more difficult to in a simulator type environment to add in volume profiling and those type of things. I think that's where it could get a little bit dicey and a little bit hairy. But if we could turn around and do something like this and be able to run it in a simulator and test it and do all sorts of stuff, I think it would be helpful not just in the development of traders, but for us as well, developing our own methodologies and systems and all sorts of stuff. I see you're typing over in Discord, Maddie, so I'm not saying anything. I'm just waiting for you to get done. You get done typing, and you're old too. See, I know this is going to take a moment. It's okay. Step away from the walker. You might be able to type a little bit faster. At least I could laugh at my dumb jokes. Sorry, that wasn't nice, but God, it was funny. But you know what, though? That's the whole key, right? If you want to be nice, you're just really not that funny, because if you think about it, nice things aren't funny. If you want to be funny, you gotta step away from being nice for a moment. Another one, this might be some new stuff, and if we go back to the lower time frame than 15-minute, we might see the positive delta more specific rather than the whole massive candle, though the idea is the same. Also is Asia, I believe. This was 3:30 in the afternoon of the US session. 33 now. You got many years for the walker. I'm much closer to the walker than you are. 33. That's awesome. I love it. You're living the life, man. You are living the life. I love it. Love it. 33, I was doing the same thing. Maddie, if you're married, don't get divorced. Don't do it. Don't do it. Figure out how to live with the woman. Oh, Jesus. Oh, good times. Good time. So there it is. There's the demonstration. That's what we're doing. Um, that's probably the last time that we're going to see this. Because I don't know. I think there's something here. I think there's something here. I don't want to keep anything back from anybody by any stretch of the imagination, but I think we need to figure out what it is that we're going to do here. That's what you're doing. That's what you're doing, Ram. Good. Yes, keep her. Figure out how to keep her happy. Yeah, but the low got set in Asia, right? Yeah, exactly. Yes. Do that. So you're looking at the Asian low. The low was set in Asia. Okay. Let me focus here and see what the hell is going on. If we go back to the lower time frame, the 15-minute, we might see the positive delta more specific rather than the whole massive candle. You know what? Let's just do it. Let's just run this. Okay? So this is what we're going to do, just so we can make sure that we see everything. Let me look here. Can we see everything here? We can. We can see everything there. We're going to drop this down where you can still see everything. We're going to take Tony and remove him off of the camera because nobody needs to be looking at Tony right now anyhow. Tony doesn't even want to look at Tony at the moment. Now what we want to do is figure out how to manage women. Shot callers. No, mate, I'm off. Don't worry about my times. You got it. Okay, beautiful. Well, Maddie, thank you for being here. I truly appreciate you. Shot caller thing was just a joke. Don't take it seriously. That's what I used to always tell my my wife. Yes, and congrats, Brady. Absolutely. You're confused about your European times and all that. Yeah, no, I get it. We will discuss further, I am sure. But Maddie, I mean, if you look here though, look at your other higher volume and delta. Okay, I know you got to go, and you probably got to go keep the wife happy. And seriously, congratulations on your marriage. I loved being married. We just communication, respect, and honesty. If you can bring those three things into the equation, love will always be there. But if we look at the delta, right, and we look here at this area where this higher delta was put in, and we look at the price here, price went right back into that range. Right back into it after the move. There's your inventory. No, I used to joke with my wife all the time. I was like, I'm going to go to Tiffany's and get you a shot collar. That way you'll wear it because it came from the little blue box. And your hair will be curly. And you'll have a nervous twitch every once in a while. Everybody will think it's cute. Now you know why I'm divorced. Anyways. So yeah, that area there, I think, is in context when we look at the higher volume. And if we do that same thing on the sell side, we have that high volume that picked up in here. And then a high volume here as well. There's your auction. Look at your auction and delta right here, guys. Do you see that? Do you see what I'm seeing? The buyers and sellers getting aggressive right around the same time at 10:30 in the morning in the US session. And we return to that with the momentum. Let's see what happens here. Asia session is now open. We open with a nice big bar coming right down into this area again. Now, do we hold? Buyers are trying to step in. They're trying to defend. Look at this. Buyers are immediately trying to defend the area. And then the buyers are gone. And price action starts to move down. Down bar. There's still this is interesting. Because if you look at price here, right, you're anticipating a continuation down, but you're looking at volume and you're anticipating buyers to support this area and add in back into inventory. Maddie, you're on to something. What UCT am I running? I don't know. Do I have my charts all messed up? Let's look. Data. Minute adjusted bid ask. So midnight to midnight? No, this is not, I don't have it custom. That's not on. Where is it in here? I know it's in here. Properties? Or wait, is it in? Oh, I know it's in here. Give me a second, Maddie. Let me look. Let's see. Oh, you know where it's at. I know where it's at. It's over here. I got to get this. I got to get this, and then I've got to go into, I think it's options. Window about us. It's in here somewhere. Oh, symbol manager. There we go. And then if we do CME, I don't think I can change it. I think it's set from what my connection is. So mine would be set on New York time, and I don't know exactly what the UTC is on that. Maddie, you know me. Options, setting time zone list. Options. Options. Settings, time, settings. Time zone list, Eastern, UTC 5. There we go. Thank you, Ram. Appreciate you. I knew it was in there somewhere. I'm so dumb sometimes. UTC 5, Eastern Time, US and Canada. There we go. It takes you forever. God. Oh. Because market closes 17:18 UTC4, then Asia opens there, meaning that 20 UTC4 is Asia no. Yes. NYC is UTC4. I'm starting to believe the low from my last Discord pick is in Asia. It might be. It might be. As I'm running off of UTC5, not UTC4, but UTC5. New York, Canada time frame. Asia session opens at 7 p.m. New York time. But I always look at it as 8 p.m. because that's where I find the volatility actually starts in the Asia market. It's around 8 and not 7. So I always, in my head, I don't trade Asia until 8. Even though it opens at 7, if I'm going to trade Asia, I'm not even going to touch the market until 8 p.m. So I think I just have in my head a mix-up between the two, but that's the reason why the mix-up exists. Which, I mean, you guys know me well enough by now that you probably understand that I can get mixed up pretty easily. And if you don't, well, you should. Sorry, I have fake publishers trying to contact me. But you're absolutely correct, Maddie, in what you're looking at. Yeah, my night Asia, morning Disney matter really. I just needed to get unconfused. There again, the needy. No, you're good. You are good. It takes a moment sometimes for us to get onto the right time and everything else along those lines, right? I mean, you're over and across the pond. Doesn't should it say not Disney? Well, Disney don't, same thing. Disney, just don't. Learning something new every day. Thank you. Ram, absolutely. Absolutely. Thank you for being here. I mean, I don't think Maddie and I would be collaborating near as well if it wasn't for you being here with your questions and stuff too. So this all works out perfectly, my friends. It always does, though. Think about life. It always, always, always works out. Even in our deepest, darkest times, it still works out. Oh, I've been replaying this and no. Oh man. I'm out of it. Um a pill for coughing. I have bronchitis. My my lungs are not the um strongest part of my body by any stretch of the imagination. So I have bronchitis right now and I took Jesus, sorry. I should have muted it. Sorry about that. I took a cough medicine pill that they gave me. And it's these little tiny pills. I mean, they're like microscopic tiny. But they pack a punch, man. They're just like, man, I'm like tired and I don't know. Um, but yeah, no, so I'm battling that at the moment and hopefully it's not going to turn into pneumonia, but a lot of times when I catch when I have bronchitis, a lot of times it will move into my lungs and turn into that water, that mucus or whatever you want to call it, comes into my lungs and I develop pneumonia. So hopefully that doesn't happen. But we will see. I'm kind of dazed at the moment with the cough medicine. So, on that note, I was going to replay this with these two charts here, but I think Maddie, I think I'm going to wait until you come in tomorrow afternoon and we're going to do that. We're going to take a 15-minute and we're going to take a 2-minute chart and we're going to match them up together and we're going to see if we can't do something. And we'll probably go ahead and do it on the same day that I just did here. And then we'll just pick a session. It doesn't even matter. Maybe we'll do it from like 5 to 7 and then from 9:30 to probably from 10 to 11. Maybe we'll do both just to check it out and see what happens. So from like 5 to 7 a.m. New York time to 10 to 11 a.m. Eastern for the US session, I think would be good to do that. And I apologize for coughing in everybody's ears there. My Stream Deck that I use to mute my microphone. It's not on right now. I need to reset my machine. I see you typing over in Discord, Maddie. I'll wait. Maddie's doing something over here. Look at all the delta bars. The one with the biggest positive delta bar is the one bar that holds the low. Interesting. That's really interesting, Maddie. Hmm. Like for the new range that I highlighted with the red circle around the delta bars, don't mind the black line. I could remove it. It got screwed up a bit. Hope you get it though. Well, look what I just did here. You know, here's your high volume, right, for the down right here. Okay, this is the trigger of the potential reversal, right? This is the bar where your largest delta came in this whole range of trading in here where you have the higher volatility, and that closes here. And then we just trade in this range until we break out over here at the Asian session. The Asian session comes in and tests the close of the large delta that comes in, holds that whole area where the sellers came in, and then just moves above. And then we break below it, right? We try to buy back in above it again, reject. And here's your high delta again. The first time that you have your high delta again, is right here on this bar. And so this becomes your new index here and here. Now we need to see where the high buy volume comes in, which in this move so far is this bar right here. Yeah, which is this bar right here. Now I confused myself. So we break back below this is where we'd be anticipating the sellers to come back in. But if we get back up into this range, they're going to defend this area up here. Oh man, I've already reset this. Wait, is that today? Yeah, let's just go live and see what happened, because that's today. And I'm sure you're probably typing something, Maddie. Let me look. No, not yet. Okay. Let's go back to live and see what's happening in the market right now. Because that's the highest delta that came in after here, but really we don't want to go back that far. It's this bar right here, which is the highest delta. I went too far. And now I've lost price. Damn it. Oh, I know why. There we go. And so that highest delta that came in after this, now just following not quite what I meant, but I'm trying to do this from the phone. Yeah, and I don't think I have it exactly the way that you have it. I don't think it's exact. I think it's a little bit different, but you know, I mean, that just shows a difference in our personalities a little bit. But yeah, no, there's something here. Let me get rid of all these lines. Okay, so we have the high volume here. For the buyers. Then the sell volume comes in right after that. This now comes down here. The high volume for the buyers is right here. And then the buyers step in stronger right here at a lower price. But this is the area of inventory. We break out of that a little bit. We don't even come into the highs up here. But this is your inventory for your shorts. Right here in this area. And then price action continues to move down. There's your test back into the area. There's your test back into the area again for inventory. And there's your down move. Yeah, I see it. I see it. The same thing here. There's the low. And this is that auction I was talking about, right? Buyers and sellers communicating strongly around the same price. And there's your pullback into the area. There's your continued pullback into the area. Until you get that extra high volume coming in again, and there's your reversal. Same price where you went short today? Around 29,100? Yeah. Yeah, that was a good short that you had. this morning, Ram. Yeah, sellers were strong. I got mixed up with this today. Sellers, buyers in here, sellers in here. So I was anticipating some chop, and we had a really good move out of the open, and I was anticipating chop at the time, so I didn't get in. Yeah, that last example there of buys was spot on what I meant. Perfect. Yeah, no, I see what you're looking at here. I really do. And it's interesting to me that the next high volume doesn't happen until over here. It happens again in what I call auctions, right? Buyers and sellers aggressive around the same price, around the same time. Two different bars where they're aggressive, right? And it happens again right here. And this just so happens to be the reversal from the long. High volume again right here, right around that same time period. The sellers of the high volume and the buyers. There's your sellers. There's your buyers. We never break the high of the sellers at all. We come down through the range. There's your inventory. And they're collecting some inventory in here too. You can just see it, right? They're collecting inventory in here, but they're really collecting inventory in here. And then price action breaks. And the next high volume is here on this bar. I don't have sellers to go off of. But if we just go off of this range right here, there's the break, there's a test, and there's a continuation down. Looks like big market player drove price up to get good exit price. Possibly. And they will do that. I mean, here's the thing, right? This is the thing that we have to understand. Okay, when it comes to institutional big players, okay, smart money, whatever you want to call them, okay, they don't need to be right. What they are doing is they're investing customer funds, okay? Those are the biggest players. That's your Blackstone, that's your Pinnacle, your Raymond James, any of these broker dealers out there, right, that are holding vast amounts of funds, okay? And what they do is they'll get orders from their clients and customers saying, hey, I need access to funds from the account. Well, the asset managers aren't just going to pull funds out right now. They're going to wait, and they have inventory. And so they can get better prices for their customers utilizing their inventory to push price. And this is exactly what they do. And they can do that. And then you have the hedge funds, which are using the indices to utilize options. And those options can change the price as well. I just don't know how much influence options have on price. I don't know. I don't know the correlation between those two. And it's always bothered me because here you have options that you're writing and then you're buying, which are set to strike prices of the actual indices themselves. But you're doing contracts. You're not buying or selling. You're doing a starts with a D. Come on, Tony. Get the word. Derivative. You're actually investing in derivative. Okay? And what's a derivative? Well, you've got a stock, let's say, for example, futures are derivatives. You have a stock, A stock is a security. And then you have a contract based upon the security. And any contract based upon the security is what we call a derivative. Well, futures markets are derivatives as well because they're not actually the security. They're the indice of the price of all the securities within the basket. And in the S&P 500, it's basically $50,000 worth of stock. And so when you enter the S&P 500, you're basically buying or trading $50,000 worth of shares in the S&P 500. The NASDAQ would be $20,000 of shares within the NASDAQ, okay? But then you have options. And the options themselves is another subset derivatives. And how the options work is you have an individual that's writing a contract that is obligated to exercise that contract if the individual purchasing that contract decides to exercise it. So you're obligated writing the option, and then the buyer of the option has the right to exercise it, not the obligation. And so you're dealing with these side market of options that have strike prices. But the funds of those options are not going directly into the index itself. And so is the volume of options directly related to the price of the indices? And does that price actually, or do those contracts actually make price of the indices move? And I don't know. I don't know if they do. That's why gamma and these other things kind of bother me. Not because I don't think that they necessarily work. And if you think about it, the gamma work and those type of things that's out there, it was pretty much came out around 2020 and then it stopped. Nobody's talking about it. There's no other videos out there. There's very little information about it. And so it's either it worked really well and they're keeping it hidden, or it doesn't really work at all because the contracts and the derivatives of the contracts and the options aren't directly related to the price itself. But then you also have these equity index annuities, right? That what they're doing is they have a participation rate of, let's say, 80, 90, 100%, whatever the participation rate is of the actual indice, the package that you get into. And then they have a cap. The cap can be 8%, 10%, 12%. So the market's up 20% in 1 year. Your capital, your account can move up to the participation rate. So let's say it's 90%. So 90% of your funds are invested. And then you have the contract or the 12% that you can gain, but you won't see any gain difference between the other additional 28%. Sounds like someone is getting into options flow and GEX levels. I know that they do, at least in my head they do, but gamma is the new ICT all my feed is filled with. Exactly. And it doesn't, and I'm not getting into it by any stretch of the imagination. This is a theory that I have, right? And I don't understand it. I don't understand the concept because you're dealing with the derivative itself, and the derivative of the options don't directly reflect the price of the index. And so, yeah, you can have Max Payne and you can have other things and you can cover the options and those type of things, but that's all being done off of the writers and the buyers of these contracts. It has nothing to do with the price of the index. It has everything to do with how the contracts are going to be exercised, but it has nothing to do with the actual index price. And that's why those types of studies bother me. Not because I don't think, it's almost like fundamentally, it just doesn't make sense to me. Now, that's either because I don't understand the full fundamentals properly, or it's that there's something there and it just doesn't make sense. But it's just another line on the chart. Like, right. Like we really don't need it. Exactly. But it is cool for me. Just a new thing to learn and keeping evolving and trading. I like it for that reason only. More to know. Exactly. And it does become another line in the chart. And that's the whole key, right? Is how do we take lines out the chart? Because we don't need more lines on the chart. We're proving that just within the study of the 15 minutes. we can just read price. And if we can just read price, well, now we just need some entry criteria. And that's all going to come from volume. Maddie, you're still here. I thought you were leaving, so I wasn't going to do this. And I've been talking about nonsense stuff because I thought you were leaving. But I'm getting back into this. What day were we on? We were on June 3rd. Well, if it gives additional confluence to enter or exit profitable trades, well, yes. But why do we need that confluence? Because we don't understand. I'm not saying I'm right. I'm not saying I'm right at all. But think about it this way, Ram. If you're able to just trade price and volume, the confluence happens when price and volume. You don't need any other lines than what price and volume is already providing you. I'm not saying that's true. What I'm saying is that theory, if you design a methodology based upon that theory, then that methodology proves the theory is true because the methodology is there and it works. I'm not saying that methodology works. What I'm saying is we add too much stuff to our charts in the very beginning. We need this and we need that and we need this and we need that. And we're constantly looking at adding more stuff to our charts. But if we really just take everything off, what is it that we actually need? That's my question. What is it that we actually need to trade? And I don't think we know because I think we put too much stuff on our charts. I know you misunderstood me, and I didn't correct it. Though now I am really leaving. This was awesome. I hope you do the exercise again. I will for sure get back into it. I did it a lot 2 years. Yeah. I'm working on stuff, Maddie. I'm working on stuff on the back end. So this is definitely going to be done again. I just don't know what format it's going to be done in. And I'm sure I probably misunderstood you again. I'm probably misunderstanding everything right now. Don't make me laugh. God bless it. But we're going to get back into this again, Maddie. Are you going to be here tomorrow? If you're going to be back here tomorrow, I'm going to wait for this for tomorrow because I really think that you're going to have some insights to this and what I'm going to show tomorrow. So I'm going to wait for you to be here, Bram. No offense to you by any stretch of the imagination. You have great insights as well, just in different ways. Having new jargons will attract new viewers to channel. You know what's going to attract the people to the channel? Me trading and showing my results in the Tradeify. That's what's going to attract new individuals. I'm not too concerned about that right now, to be honest with you. They're going to do what they're going to do. What I'm concerned with at the moment is that's going to happen, right? That's going to happen. I'm going to trade well in the Tradeify account. Might take me a few weeks, a few months to get there, but it's right around the corner. It's 100% going to happen. So now what I need to do is develop the content of what I need for those people. I wish I could say, but summertime and that, I don't really know when I get time to get on. Got to keep the wife happy, Absolutely, 100%. I get it. I'm chopped liver to you, Maddie. I understand, just secondary. I get it. Kind of hurts my feelings, but I get it. No. Yeah, when you're here, just let me know. You can watch these later on as well. I hope I get on tomorrow, but I can't say for sure. No, absolutely. Are you still on vacation? Are you still in Germany? Or are you home now? In Deutschland. I always get confused because you get Denmark and it's the Dutch, right? And you get the Germans and, well, they're kind of Dutch too. And then you got Deutschland. And is Deutschland really Denmark and Germany? And if so, then why are they two separate countries? I don't understand the difference between the two states. I really don't. And then of course you got the Netherlands, which is kind of wrapped into the whole thing as well. And I don't know. Maybe my feeble American mind just can't figure it out. It's possible. Just like I can't figure out options. It's possible. 5 a.m. Beautiful. So now we're going to put this on. Ram, you're still with me, so we're gonna work on this for a few minutes. I'm home, but at my summer house, so still vacay. Maddie, you're awesome. I used to have a house in Florida, outside of Orlando. I had a house in Vegas and a house in Ohio, and so I understand completely. I love it. You are living the life, my friend. Living the life. Love it. And so we got it to the sideways bar here, right? And the down. So I'm looking for a possible move at the moment to the upside. And it's already started. And I'm having a hard time really with the 15-minute and the actual direction. We got the down, we got the sideways, bar here. I've got a line in my delta now that I need to get rid of. And so I'm going to wait here for a few minutes before I really make a decision on which direction to go in this particular market condition. I'm kind of confused at the moment with this doji bar that came in. And we're definitely in an uptrend in the context. So any lower low here I'd want to buy. There's a lower low right there in that context. And so anticipating price action to continue higher. So let's just go ahead and buy this at the open. We got to go to Sim from that, and so I'm a little bit late. Ugh. Why is this so difficult? Yeah, just enter me in the market. I don't care. I see a few days in friend's summer house last week in Poland. Would love to buy one if things happen. Poland, the Polish. Oh my God, the Polish are amazing. So, the Polish. Oh my God, these guys, these guys. I'm in Afghanistan, right? Working with all sorts of different groups of people. I got the Spaniards, I got the Italians, I've got the Polish, I got the British Marines, I mean, all sorts of people around me, right? And I'm a talkative guy. I get along with different people, and the Polish invited me over to their tent one night for like a barbecue type thing. So I come over to the Polish tent, and these guys, the first thing when you walk into the tent, right? They've got this massive, real skin of a tiger on the ground, mouth opened, fangs, the whole works, right? And then they have this huge tub, this bladder, drum that they filled with water, and it was like their own little pool. And so they have this tiger in their tent with a pool. Greatest guys ever. Crazy, funny, hilarious. They had a pool. Ingenious. Absolutely ingenious. In Afghanistan. Of all places, a pool. Only the Polish. Only the Polish. And I say that with all the respect for the Polish. So there's the lower low, right? That was the place that we should have added. So I was saying that any lower low to buy it, right? So get in here at the open of the bar in case it just runs up. And then you turn around, you wait for the break of the low, and you add another position into that. What would happen if you add another position? Your entry is going to drop about down here to this area. And now you've got 2 on because you're building inventory. Let's take this whole idea of what Maddie is talking about here. This is kind of the auction, and this is that area that's building for the long position, is all through this area in here. So we're looking for a continuation play to the upside, and we don't have any other large volume over here that we could possibly use for indexing a possible reversal. So we're still looking for a continuation play to the upside. And I'm on a micro right now, so it doesn't really matter what price actually does, but we're looking for a continuation to the upside. Price action's moving up through here. Let's see what happens around the high of this bar. I wish I would have entered another contract down here because I want 2 contracts. I would exit one right here just below this high volume. So I'd exit 1 contract right in here. And I know that doesn't sound like a lot from the concept of the micro, but there you go. So you're up about $9 on one, and we're already seeing that rejection off of the test of that high volume, right? And so if anything, you want to be short here, but I'm looking at Maddie's context of what he's looking at when it comes into the high volume and looking at this area holding, and we don't have the excess high volumes. Look for a continuation move to the upside. Maddie, you're on to something. God, I could have been Maddie's wife. Don't make me laugh. Oh my God. Don't. I'm going to start coughing. Oh, man. Anyways. $15 still telling us long here possible rejection off of this high. Nothing that I would actually want to enter a short on because I'm looking at this area still holding. But if I didn't know this area was here, I could definitely short off of this. And if you're in a mini, it's enough room. But there's your continuation. Exactly what we'd anticipate to have happen in the context of this overall area here. Now we're anticipating these highs over here to break. Where's the high volume on those highs? Yeah, I need to adjust my dots. So your high volume and the highs are is right where? Where? Right about here. Yeah, that's the theory, Maddie. So what we're doing is testing a theory right now. And that theory is wow. The high volume area right in here, right? And I don't have anything to index over here because we don't have the high volume to the downside. And so I'm not utilizing that, right? But what's happening here is we've got this area where the buyers actually stepped into the market. Okay. Sellers were in, sellers had a nice momentum. Buyers stepped into the market right here in this area. And then we came up and we made this high. And we've been holding this area ever since. And so looking for a continuation play to the upside. And here's your momentum bar. Here is your momentum bar. Here's your high volume. This is the high volume from, I wanted the high volume from up here. I picked it from the wrong side. Dang it. But that makes sense though, because there's not really necessarily a lot of, the higher volume was down here. But that is the high volume range from the actual high itself. And that's where price currently is. Looking for price to come down here, test into this area. Looking for rejection and continuation to the upside. We have about 4 minutes before the 15-minute closes. And the 15-minute closes where it's at right now and anticipate a continuation play to the upside. So no, we're not necessarily trying to collect inventory up here at the high volume node. It's more of this is the overall move to the upside here, right? And these highs over here was the last time that price action was in this area. So I'm looking for price action to come up and test this area of the 745, 743, like a magnet, right? For this to act like a magnet for price to come up and trade into. Remember when we were talking about this as in entries and those type of things, we can use volume to determine where we expect price to go. That's exactly what we're doing here. And that's what this area represents. We have rejection up here. And now we have price that came down, traded back down through the high volume, right? This high volume segment that came into the market in here. You have another one back here, and you have this one back here as well. This is actually your highest one. Right here with the most volume. And so that means that your buyers and sellers in here, this is your range. And that's where they came back into twice, rejected. And so now what we're looking at is, are we going to get above this range, or is this going to be our rejection point? Okay, that's what we're looking for right now. Are we going to get a continuation out of here? So this is more of the inflection point. This is where, okay, now that we're here in this area, what is the market doing and what is it going to do? This is where we need to start making decisions. We're in a long position, okay? We're in a long position. We're holding the long position. We're looking for a continuation right now to the upside, but we're in an area of high volume. So is this going to act as rejection, or are we going to get above it? We need more information. And to get more information in trading, we just wait. Time. And see how we're seeing some rejection on the 15-minute chart? Some nice rejection on the 15-minute chart. Wouldn't be a bad idea to be short here. Now the 15-minute is still telling us long. It's not telling us a reversal yet. It's still telling us long. But the short-term chart is telling us a possible short. And we're scalping. So we want to go off of the short-term chart right now. So now we have a new bar on the 15-minute chart. The 15-minute chart, we should be anticipating long, right? Nice big up bar, close at its high, should anticipate a continuation to the upside. We're back into the area here. I'm going to add another one. No, just thank you. Buy delta in here. Let's see what happens at the high. Sell another one here. Anticipating this high to possibly break. Remember, the 15-minute is telling us long. This is why we're in micros. So we can trade this whole area. And that 15-minute chart is telling us long the whole time. And we have that high volume up here. See, now we have a high volume up here, right? So I'm going to go ahead and enter another one. What price is this? 764. I don't understand. Oh, because I'm holding off the limit, that's why. Duh. Now I understand. Okay. Now the 15-minute is telling us possible rejection up here. Collecting inventory would be down here. That's where we would be looking at to collect inventory. Price action has a long way to go from inventory. We're looking at this as a continuation play to the upside from where they're collecting inventory, but we have the highs up here and we're looking for possible rejection up here. Short term was telling me short. Longer term 15-minute was telling me long. And the 15-minute is telling me long again. $15-minute is having a hard time getting above these highs right here and holding that price at 51.5. 51.5 is kind of resistance right now, and of course now it's support. Price action should come up and break these highs up here. We came right back down and tested that 51.75 and immediately found buyers in it. Nice strong delta down here. I'm looking for this 50.25 to be tested on the next bar, and then looking for the highs to possibly break. So 51.5 again, still acting as a level of support there. And there's a stop. That whole time the 15-minute is telling us long. $15-minute still telling us long. We couldn't get below the open of this bar. We're testing right back into the range again. I'm anticipating these highs to come back and test. I want to be in at least 2 right now. Pull back, we're expecting the 51.5 to hold. It's our first level of support right down here. And then we're also looking for this area to hold in here of the high volume. But right now the 15-minute chart is still telling us long. But we barely broke the highs up here. Which means we can come back up here and test the 62.75. But this could be the possible short. Now see, this is where the laboratory, the practice has to come in, right? How are we going to utilize the volume to enter around that 15-minute chart in the anticipation of direction to the 15-minute? This is how we put this whole thing together. What we're basically doing is taking the same thing that we did in the 15-minute chart before, right? And the analysis. So what just happened? We just barely broke these highs up here. barely breaking the highs, we should be now in a short position in the 15-minute. Why are we still long? Because of this bar right here. But breaking these highs up here, not breaking or barely breaking those highs, we should be in a short position. So I'm going to go ahead, buy 2 right now. I wanted to sell. There we go. We're going to take another expense, but now we're going to turn around and we're going to sell 2 here in the market where we're at currently, anticipating price action to possibly come back down into the 68.75 area. Let's see what happens. $15 is now looking extremely bearish. These lows in here are going to be important. If we barely break these lows, we could be looking for a continuation play to the upside. If we break these lows with some momentum, then we could be looking for a continuation play to the downside, possibly into this lower range around the 689 area. Let's see what happens. Delta's still strong on the 15-minute. We can absolutely test this high volume in here. And if we test this high volume in here, right up in this area in here, is where I would anticipate a test to come in. And if we test into that area, it'd be reasons for us to enter back in and add to the short position. Right up here. Position stops us out and is incorrect if we break this high. And if we want to look at a okay, there it is. So let's go ahead and delete this. Ram, need to step away from charts for a while. We'll check this later. Tony, have a good day. You too, Ram. Thank you so much. I appreciate you. Yeah, I'm just testing something here is all I'm doing. I'm not doing anything crazy. I'm just looking at something. Just an idea that I have is all. But you have a good one. You enjoy. Thank you so much for today and great trading today. By the way, Ram, great trading. Proud of you. Well done. Okay, why isn't it letting me drag this? There we go. There's that one. Now, I need this here. There's the high volume test I was looking for. So now we add another one. Let's bring this up here. 69.5. I'm going to put 4 up here. No. There we go. There we go. And so a 1-to-1 isn't going to be until way down here. Wow. Okay. That's what I wanted to check. Wow. Okay. I just want to check with this type of stop, right? What are we looking at for potential revenue coming into the market? And the 1-to-1, it's not making any sense to me anyhow, because from here to here, which should be, what is that, 69 to 57, 12 points. So 57, 12 points would be 45. This should be a 1-to-1 right down here. That makes a lot more sense. And so this is more like a 3, 4-to-1 down here. I don't know why it's not calculating that properly. And I don't know why it just got me out of the position, because it stopped me out. Makes sense. Okay. And so now we want to go in the direction of the 15-minute. Should be the high volume task down in here. I changed this to 2. Looking for a break of the low here. There's the break of the low. Let's see if buyers step in up here. Strong delta. Wait for adding into the position. There's 2 more. It should only be in 5 right now. We should have 1 more that we can get in, but I entered the first 6 off of 2, so we should have been in 3. Just added 2, that would be 5. See what happens if we can get up here into the open of this bar, get above it. See what happens to delta. And see, here's the open of the bar, right? But look at the delta. The delta is still down. And so what is that? What does that mean? We've got a level of divergence here. Right? Down delta, strong up in price. If we start getting market orders to buy up into these areas, price action can move pretty rapidly to the upside. But we're rejecting there. Look at the rejection. The sell orders came in. There's more sellers into this area right now than buyers. But that delta wasn't able to bring price down below the open. Test into this area. We see buyers step in. We sure do right there. That's going to be our 10th contract, and that's our final entry, our final price of entry. I didn't know I could do that. Well, that's interesting. Okay. Well, let's try this. I'm just curious. I wish Maddie was here. Where is it at? It's the high volume. I think I indexed this right here. Yes, I did. Okay. So if that's the high right here, these are the lows. That's the high volume that came in. This one came in a little bit more directly. This is the one I'm indexing. So let me see here. If I'm in here, let's go ahead and draw VWAP from here. And we're going to extend this. Okay. But I don't think that's the high that I indexed, though. Excuse me. I think it was this high right here that I indexed. That doesn't make a lot of sense either. Yeah, I don't know. It's farther back than that, though. I know that for a fact. Oh, you know what? I indexed it from here. So we're looking at the 715. So if we go all the way back to the 715, right about here. There we go. Now, what is VWAP telling us? The high of the range. Okay. There's mid way down there. We're at the high right now. There's the low. Low, mid is right here. Okay, that's helpful to know. $15-minute came right into 47.25, which is the high volume that I set up from over here. The original. Six minutes before the 15-minute bar closes. I am anticipating it to close as an up bar. 66.75 is the open of that bar. That means that we would be above here, above this area for that to be an up bar. Hey, 10, welcome. Sorry I didn't say hi sooner. I'm studying something right now in charts. I'm studying something and practicing at the moment. Studying an idea. Based on that 15-minute chart, I am looking for a continuation to this move. And I am looking at this bar in the next 5 minutes closing as an up bar. And the open of that bar is currently at 66.75. So above there. Jared, how's it going? Okay, so what I'm doing is earlier in this session, what I did was I shared an idea with everybody regarding how to just use a 15-minute chart and just go back and read a 15-minute chart at the live edge. So in other words, do a replay, just put a 15-minute chart up, nothing else. I use Delta. You can put Delta on there if you want to. And just watch how price develops and say out loud what it is that you would expect the market to do next bar. And so with the way that this bar closed here, I'm expecting an up bar. Okay. And so then what we're doing is taking that idea of what we're seeing in price and being able to read price and do that until you can hit it with an 80-90% accuracy. I also do it at 200 times speed where it's much faster. And I can get through 24 hours in less than an hour. And then look and see what your probability is or your accuracy, right? And so let's say you drop 10 bars out of 24 hours that you were incorrect with. Over a 24-hour period on a 15-minute chart, there's 996 bars, okay? So if you drop 10, right, out of 96, it's a little bit more than 10%. So you're really at basically about an 88, 89% accuracy. So pick your accuracy that you want, right? And then once you have your accuracy, how do we then turn around and take that information from here and the anticipation of the expectation of what price is going to do next based off the 15-minute chart and enter around that area for a scalp off of a shorter time frame using volume and auction market theory. And so when I was first doing this, we broke these highs barely and came off of them. And so looking for a possible short, we're holding this structure down here for a potential long. We're collecting inventory throughout this whole process. So looking for a continuation play to the upside. That's what this is all about right here. And I'm just waiting for that to see if it plays out or not. And I'm really just kind of focused in on the short-term chart right now, knowing and expecting what I'm looking at for the 15-minute. The 15-minute's going to close here in about 2 minutes. This is the open of that bar, so price would have to come above this bar in order for the 15-minute to close as an up bar, okay? And then we have this area here, which is an index off of these highs over here, which is the high volume of these highs up here in this range. And we're currently holding that as potential resistance to the market. And so I'm just coming through and saying, okay, if we take the 15-minute chart, we use that as our index chart. We use that in anticipation of what the next bar is going to be. How do we enter around that information on a shorter term chart? That's the idea. Because if I can unlock that and find the connective pieces in that, this is a great exercise for individuals to be able to practice. and start developing as a trader by reading price, by basically reading the tea leaves in price, right? Giving you an idea of what direction the price is actually flowing in, up or down. And then utilizing the participants to give us breadcrumbs to say, okay, there's more participants on that side. Now is a good time to get in, right? And then piece those two ideas together, and now you have something that an individual can practice all on their own and develop themselves into a trader, not an individual that's just reading indicators and waiting for a particular setup and just entering the market. You have a complete understanding of your trading strategy, of the auction itself, and how to develop yourself into a trader and be able to practice it all at the same time. That's what I'm working on. And of course, I'm still using asset management type theory in terms of utilizing inventory to manage a position, to manage risk, to manage entry, to do all of this stuff in that context. But once we can master reading price, once we can master how price behaves around volume, now we can create a methodology around those ideas. Didn't quite close as an up bar, but absolutely rejected off of the lower area in here, the higher volume. So what would be anticipating? Price action to possibly come in and test the high volume of this little pullback and then continue to the upside. And so if we're going to do that and the high volume is down through here in this area, anticipating this area here to hold. And if this area does not hold, we can actually move it up into here. Higher volume. We got the higher volume in here, right here. I like that. If this area doesn't hold, we can be defensive on our stop and get out in a much better position on the exit. If this area does hold, anticipation price action to move higher. If we still had inventory to use, we could actually be adding into the position. It's coming here into this area. See how the buyers are stepping in right here? We could actually add into the position and lower our entry price and bringing it closer to us. So there's all sorts of stuff that we can do. We have to be able to bring together the expectation of direction on the 15-minute, where to enter at on the shorter time frame chart. Any questions, comments, concerns? I'm not trying to just be another individual that teaches individuals, oh, they, just follow me, or, here's the entry criteria that I'm looking for. Here's a pullback, this is how to, trade the markets. What I want to do is be able to develop traders into traders. Barely broke the low there. Barely broke the low. Still holding on to the high volume area on the 15-minute chart. Delta is green on the 15-minute chart, even coming off the lows. So Jason, the shorter time frame I'm using is a 2-minute. So I'm using a 2-minute chart in direction of the 15-minute. And that might change over time too. And based upon a short-term chart, right, I'd much rather be short than I would long. Delta is now coming into the downside on the 15-minute chart as well. And the 15-minute chart is looking much more bearish than it was before, right through here. And so this is the first time I've actually tried to mirror these two ideologies, these two things together at the live edge, right? And not doing a very good job of it at the moment, but that makes perfect sense. When we do something new for the first time, we're usually not very good at it. This is what coming in here and being in the laboratory is all about. Taking theories, taking ideas, testing them, right? How to make them better. Community being involved in that as well. Maddie was here just a little while ago and had an idea based upon the information that I was seeing off the 15-minute chart, that I've kind of incorporated into this a little bit as well. So a lot of moving pieces, but a lot of really good moving pieces, all designed to help individuals develop into a trader. Now, some individuals will say, well, I want to be a trader, right? But really what they mean is, I just want somebody that's going to be in front of me that I can just watch, push the button when they do, and I can pass evals that way, right? But that's not a trader. That's not an individual that's trading. That they're going to find somebody else to go follow. What I'm looking for is individuals that really want to, they don't want LeBron James's basketball. They want his skill. And so the individuals that want his basketball are going to go find somebody else. I want the individuals that want him skill, because that's what we're going to create here. We're going to create the skills of developing individuals and how to become actual traders. And it starts here. Pizza Hut Queen, welcome. It's good to see you. I hope you are well. If you have any questions, let me know. Tony. I love it. I love it. I love it. I love it. Today, I'm confused. I'm really confused, Pizza Hut Queen. Today? Really? Just today? Don't make me laugh. So what's going on? Why are you bitchy today? What's happening? Did you wake up on the wrong side of the bed? Did you stub your toe? Did your hair frizz? I don't know. Did you not get your Pizza Hut? Or did you not get your wings? Or both? Oh. What happened over the weekend? See, it's hard to be bitchy and laughing at the same time, so you're welcome. I'm here to help. No, she's not going to talk to me anymore. And so that's what this is all about. It's about developing criteria to help individuals develop into the traders that they want to become. And that's what I'm working on here. And I'm working on pairing this exercise with how do we enter around this ideology. And when we can match those two and you develop that, what happens is now you have criteria for scalping. And not everybody wants to be scalpers, but think about it. If you want to be a day trader, you want to be a swing trader, you want to be a position trader, all of those are different forms of trade management, but they all hinge on the same criteria, and that's your entry criteria. And so if you can get really good at scalping entries, then you can turn around and pair that with any trade management methodology that you want to. And you can turn your scalp into a day trade. You can turn your day trade into a swing trade, your swing trade into a position trade, and so on and so forth. And get really crazy with it. And if you get really good in that process, you can see where the larger players are collecting inventory in the market. And then you can start adding into the market where they're adding into the market. And that's what I was trying to kind of do here a little bit. But as you can see, I missed the timing of that a little bit. But that's why we're here in the lab, right? Practicing this. Take your theories, take your ideas, bring it to the live edge in a replay and practice. That's the only way you're going to get better. That's the only way you're going to truly develop yourself. I'm just trying to provide exercises for individuals. I'm working on building exercises at the live edge that individuals can use to develop themselves into the traders that they want to become. And then once you figure it out in trading, it's all based upon intention. Now you just change the lab. Here it's charts and put it into whatever your intention wants to be. But once you get good at it here, you can practice it in any other area of your life. Because it's all the same concepts. Why the markets? Because it reflects back to you all of the automated processes in your subconscious brain that keep you from taking the action on your intention, because there's two parts of each one of us. There's the automation, our habits, our routines, and everything else that we do automatically, right? And then there's intention. The problem is the intention, the dreams, what we want in our lives, right? That part doesn't talk and communicate with the automated part. The automated part's just flat not listening. It doesn't care about the intentions and the dreams and the goals and the aspirations and all these wonderful things that that part of you does want. And whoever is in control or manipulating the body is the one that's going to control the action. And if your automated processes are controlling the body or manipulating the body, well, then the body is going to act upon whatever its intention is, not your true intentions. And so what we do is we take the automation offline and we bring the intentional online. And when we can do that, now we start to manipulate the body through intention. And then our results start to reflect and become aligned to intention, and intention starts to manifest itself within reality. And now we start living the life that we want to live. That's the whole process. And the markets just give us a laboratory that brings out our automations immediately and makes us see them. But what do we do when we see them? We create a story. Well, they stopped. They just ran our stops. Or, the market's just not behaving in a way that, it normally does. Or, we explain it away. And development is about practicing, where we stop explaining those things away and we come in and we develop ourselves to start being able to take action aligned to intention. You learn to do that in the markets, you're going to be able to do it in every other area of your life. Pizza Hut Queen, I hope you were listening to all of that, but you're probably already gone. And so this experiment that I'm running right now is not about being right in the market. It's not about being profitable in the market right now. It's about practicing how am I going to teach the connection between the two exercises. Now the 15-minute looks like it's switching to the downside, which makes a lot of sense. Markets like to stay rotational, and we're definitely in a rotation in here. Very rotational market in here. Still trending, right? But rotational. rotational. We're just starting the rotation, which means we can come down here into these areas. And if we do, the risk is just too much for us to be able to hold that position because I entered too heavily inventory in this area up here and didn't give myself enough room for the market to come against me, which is the whole reason of using micros in the first place. So I just got too aggressive too fast. Means I need to replay this day again and structure my entries differently. See the high volume that's building in here. Anticipate this low to break. And there's the stop. Beautiful. Well, on that note, I've been streaming for a while now, so I'm going to go ahead and get off. I've got some things that I need to do and battling bronchitis and all sorts of stuff. So I want to thank everybody for being here for this session. This is the afternoon session for practice, for practicing ideas, for developing, for practicing ideas for development. Just because you know how to do something doesn't mean that you're able to support it in a way that makes it teachable to other individuals. So I'm just working on bringing that whole process into the equation. As we can see here, I'm still in 1. So we're going to go ahead and exit out of that position and call it a night. Thank you, everybody, for being here. Truly, truly appreciate each and every single one of you. Thank you for all the questions. Thank you for all the support. Thank you for all the follows. Thank you for all the subscriptions and everything else that comes along with that. We're building a really good community here of individuals that really want to develop into traders, and I couldn't be more happy with the progress of this project, and it's all thanks to you guys. So thank you so much for being here. Truly appreciate each and every single one of you. And until tomorrow morning, be safe, be kind, and know that you are loved. I